Improved profit guidance overnight, and this relates to the autos unit, which is the part of the business that we've been talking about, whether they will sell off. So that could be of interest to investors. Boeing, will there be read across from the fact that we've seen for a third time a collapse in talks to try and end the strike taking place at Boeing? How does that read across, that trouble at Boeing read across into Airbus, if at all? We're watching Kering as well, of course. Gucci is getting a new CEO, and so we'll watch that management change and see what impact that has on the luxury sector. Another one, of course, the subject of big global Chinese forces of late.
Airbus numbers out a little bit later on the delivery front. Right, here we go. It is time for the opening trade this Wednesday morning. Let's take a look at exactly how Europe is opening and figure out exactly where we go from here, or at least try and get an idea. So the London market flirting in and out of positive and negative territory. The expectation is it goes north. The reason for that is that we are likely to see maybe a positive picture for the miners, for the commodity stocks, where we didn't see that yesterday. So that should be a positive. It's taking a little while to get going, though, isn't it? Stock 600 is up by just 0.3%. The market feels like it's struggling for a sense of direction. The IBEX is a little soft, actually, at the moment. Here we go. The London market gaining a little bit of steam now, maybe. The CAC 40 is fairly flat. The luxury story absolutely front and centre there. Let's see how Kering trades on the back of the news that we have seen there too. We'll wait for the DAX. It always is something of a laggard. And in the meantime, I think we should probably talk about what's going on with the sector story. Lizzie, you've got that.
Let's break it down by sector. So about roughly half of sectors more than in positive territory this morning. Media leading the gains, higher 0.6%. Just behind it, retail, higher 0.4%. But bottom of the basket, you've got energy, lower 0.5%. Banks behind that, lower 0.3%. You mentioned Kering, the new CEO. Those shares up more than 0.6% this morning. So traders welcoming the new Gucci CEO.
Yeah, things look a lot more normal, don't they, in terms of the size of the moves that we're seeing today. So yes, we're seeing some of those luxury names moving a little higher. Kering is, as you say, higher 0.8%, 0.2% higher for LVMH. So we do see some upside at sort of normal in scale, as opposed to the really outsized moves that we'd seen on both Monday and then Tuesday. So that's the luxury space. In terms of the other sectors in focus, energy, I notice, is down by 0.4%. We're actually fairly flat to positive on the oil price this morning. 77.61 is where we trade there. Waiting for an opening price on Continental, waiting for Vata, very small stock, but really interesting lithium story, waiting for that to open. Volvo Cars, just down 0.7% on the back of some management changes there.
Yeah, and as the hurricane news continues, Swiss Re lower 0.3% as we wait for the landfall of Milton as well. But yeah, looking to luxury, LVMH higher 0.1%. Burberry 0.4%. But the miners as well getting a boost. So the China news does seem to be filtering through happily into these European markets.
It's interesting what's giving London a lift, though, this morning. It's not what you would have thought, which would be the miners. Yes, they're up, but it's AstraZeneca and Unilever, both two stocks that are giving significant points to the upside at the moment. Glencore is up quite nicely, but it's not. The miners are up, but they're not adding as many points. And you've also got to remember, you've got to sort of back out some of the oil stocks as well. So Total is down today here in Europe. Shell is down by 0.3%. So kind of one factor maybe compensating for the other. It's interesting, you've got Astra up, GSK down, you've got the miners up, but you've got the commodities on the oil side down as well. much more balanced kind of read in terms of what we're seeing in this market today. Maybe more normal is the way of describing it.
Right, so that's what we see across equity markets this morning. Of course, we've seen some strength in equity markets in recent months, and the tech sector was back to the fore yesterday. That hasn't necessarily been matched by a strength in IPOs, by new companies coming to the market. We got some thoughts on that from the JP Morgan CEO, Jamie Dimon, who told Bloomberg exclusively how regulators in the US and UK need to make it easier for companies to go public.
I think it may very well stay muted because markets may come down as opposed to just go up endlessly, and they may find other sources. So when I speak to a lot of private equity and private venture and stuff like that, they tell you they have more non-public sources. I do think it's very important that our policymakers understand, because even here in the United States, we've made it hard to go public.
That's the JP Morgan CEO, Jamie Dimon, speaking to our colleague Lisa Abramowitz, exclusively speaking to Bloomberg, in fact. Let's go to another part of JP Morgan. Eric Whittemus joins us, EMEA Investment Strategy Head of JP Morgan Private Bank. Very nice to have you with us today. Thank you for coming to speak to us, Eric. So that's the conversation around IPOs. We'll park that for just a moment, thinking about the listed universe as it is right now. The earnings story is going to be front and centre before we know it. Come Friday, we're going to be talking about the banking sector and then on to the weeks ahead. What are you going to be, always we're looking for outlook statements and guidance from corporates, but is there anything specific that you're homing in on as we approach this earnings story?
The continued health or buoyancy of the consumer, we think, is going to be very important for the forthcoming earnings season that, as you mentioned, kicks off on Friday, and we'll have a lot more information in the subsequent weeks and months to come. Earnings tend to be the main driver of equity prices over the long run. We've had a heck of a rally in overall risk assets in the U.S. so far year to date, but in a market that's now trading north of 21.5 times from a forward PE ratio, it's probably going to take another strong earnings season for that next phase of the rally.
And is there a sort of tax threat hanging over European corporates at the moment? I'm thinking here about the number of governments in Europe that, they're looking at weak balance sheets, looking at corporates with what some describe to us as relatively strong balance sheets and thinking, how do governments rebuild the coffers? Maybe we need to tax companies a little more. How are you thinking about that? How is that priced into the earnings story we're going to hear about?
I think as we more so get into 2025, we get through some of these large events that are occurring around the world, debt to GDP ratios, government policies, government balance sheets, they're probably going to be more a part of the main market narrative, I think, next year. One of the things that comes to mind for me here is Mario Draghi's recent European competitiveness report. I thought that was a very interesting diagnosis with suggestions about investing to a greater degree and also trying to lighten up the degree of bureaucratic overhang to try to help foster investment, entrepreneurship, and ideally economic growth.
The problem with that is it's theoretical. The Americans are doing it. What is the reason? How strong are the reasons right now not to put money to work in the United States? If I've got an extra euro, dollar, pound, whatever it is, why shouldn't I be putting it to work in America?
The U.S. exceptionalism argument, so to speak. I would agree with you. It is a little bit hard to go against. The innovation, the FCF, the free cash flow generation of the companies in the U.S., the GDP growth that has been so remarkably sustainable. Resilient is a word that we use a lot to describe the health of the U.S. economy. I hear you. It's difficult to argue against, and we actually do continue to have a preference for the USA.
How big a threat to that is the election?
Markets tend to actually look through geopolitical events, however large, disruptive they might be. Over the long run, the impact of all these things on markets genuinely does tend to be temporary. And as we look forward over a medium-term type of time horizon, it's most likely to be the health of companies, plain old-fashioned earnings, what the consumer does, and the growth of the economy that will dictate things.
How big could the volatility be, though, around that election? What are you telling clients? What are clients asking you? It seems to be the number one subject that everybody's asking about at the moment. You're telling them to look through it.
Well, we more so kind of ground ourselves where we are year to date, which is approximately up about 20%. What those valuation levels are. The fact that volatility is actually fairly subdued given all these things that are occurring in the world. Last time I was with you all, it was in early August, right around the time of that large yen carry trade unwind movement. We had that dramatic spike in the VIX. So things can move quickly, time to time, from a volatility standpoint. So if we were to see anything even slightly resembling that, we might view it as a bit of an opportunity to phase in for long-term investment portfolios.
And Eric, are you so confident in the resilience of the US economy that you're in the no landing camp?
So we categorize ourselves as in the soft landing camp, but it is definitely a constructive development just over the last few days that we sort of saw this triple whammy of quite encouraging data in the US. We had that kind of gangbusters non-farm payrolls print meaningfully ahead of expectations. The decline in the unemployment rate, which was actually close to going all the way down to 4.0% due to rounding. So the 4.2 to 4.1 move was very encouraging, but it actually could have been even better. And then what seemed to be almost entirely overlooked due to the focus on the jobs market, the services ISM figure was also a substantial upside surprise. So there's a good combination in a Goldilocks-ish type of scenario for the U.S. at the moment.
Okay, and I also want to ask you about the growth outlook here in the UK, because we've got a budget coming. You deal a lot with ultra-wealthy families. Have they got their bags at the door expecting tax hikes and a fiscal tightening?
No doubt there will be a tremendous amount of focus, analysis, and a close look at every detail in that budget that comes later in the month. It's going to be important. I think you mentioned one of the key focus points, which is tax. We'll have a lot of analysis on that as the details come forth, but for sure, it's a bit of a factor for how people think about where do they want to invest, where do they want to, kind of pay their tax dollar and what the upcoming regime might look like.
We'll watch to see if we do get any of that shift then. What about other assets that we don't maybe cover so often, Eric, in our conversations? And infrastructure stands out to me. Private infrastructure is one area that you favour. What is it that discerns the projects that you want to get involved with from those that don't? What are you looking for specifically?
So the need for countries to invest in this space, oftentimes in conjunction with the private sector, there's so much modernization and upkeep of major infrastructure projects all around the world that needs to take place. There's so-called static infrastructure, ports, bridges, roads. There's so-called moving infrastructure, shipping lanes, shipping routes, contracted, consistent flow of goods around the world in a lot of these different investment opportunities. We think it makes a lot of sense, particularly in 25 and beyond, as there's probably going to be, in our expectation, a greater focus on these debt to GDP ratios and a desire for strategies that are less correlated to traditional asset classes. And to us, private infrastructure strategies very much so fit the bill for that.
In terms of kind of how you're thinking about where you look at the long-term story and it being, infrastructure is one. You think the US probably looks like a fairly good long-term bet. You're not worried about the short-term volatility around the election. What about China? Have we reached a point where China has become investable? How many calls are you getting saying, what's the China position right now? Should we be increasing the China position? Have we been too underweight? Are we too underweight China? Kind of what does the picture look like from an investor question point of view in terms of kind of how you're thinking about it?
For sure, to your point, the market has seemed very underweight and underinvested in China recently. Yeah. There has been certainly a bit of a bearish sentiment overhang. Positioning has been light. Technicals have not been great. Valuations have been cheap, so that should suggest an attractiveness from an investment standpoint. It seems as though it's largely going to come down to how continual is the support from the Chinese authorities, mainly on the fiscal front, to try to stimulate the economy. Yep. One of the things I was looking at just yesterday in preparation for our chat here today was the magnitude of stimulus that the U.S. did, for example, during COVID times.
Yep.
It was absolutely enormous, well north of $4 trillion in total. If China wants to stimulate the actual economy in addition to the market, it's probably going to need to show the marketplace that it's going to be fairly aggressive.
This is the stimulus they never did and should have done but didn't do and is now coming late. Is that how we should think about it?
The way I would categorize it is it's been shown for quite some time since the GFC that the countries and the economies that invest for the future and are aggressive in doing so can help point things in a positive direction. It increases debt, but that is the type of movement and directionality the market's hoping for from China.
Nice to see you, right? Thanks for stopping by to see us. Eric Whitehouse, EMEA Investment Strategy Head at JP Morgan Private Bank. Let's take a look at the Core 6, figure out what is happening at the centre of Europe. This is the story that we're watching this morning. A little more negative than positive. Ferrari's up a little bit, Novo Nordisk is up a little bit. These are not big gains, but they're also not big drops to the downside either. TSMC numbers out overnight. ASML is down by 0.8%. Keep an eye on the Google story, though. That could have an impact on the session a little bit later on, Anna.
Let's have a think about some of the stocks that are on the move this morning. For the individual movers, here's Joe Easton. Joe.
So we are now seeing some positive trading in Continental and gaining around 3% at the open of trading in Germany. Remember, we had a pre-close call with analysts ahead of their third quarter report. That was last night, and analysts over at Jefferies, Bernstein, all giving a positive take, saying that given there was no further cut to guidance, that is a bit of a relief for the parts maker that had a profit warning just around 3 weeks ago. Then we'll check in on Kering. That one was also seeing a bit of a boost on the back of a new CEO at that business in terms of the Gucci CEO coming in, stepping up from deputy CEO. But actually not too much of a gain at the moment, up 0.2%. Pretty steady in terms of most of the luxury stocks this morning following the declines we saw yesterday. Though LVMH down 0.8%. Again, a bit of weakness coming through into that one today. Then in terms of pharmaceuticals, Zealand Pharma, one of the best performing stocks in Europe this year, given their exposure to obesity drugs. They got a letter from the FDA last night relating to one of their diabetes drugs, and analysts say that could mean a delay to that product getting approved. So we are seeing that one declining around 4% over in Copenhagen. Then in terms of the Boeing read across, we were looking at Airbus, not too much. As Guy mentioned there, we might get a delivery update on that one later. Then we are also seeing Safran coming down slightly, senior edging higher. Remember, this is related to the strikes continuing on the US West Coast at the Boeing plants. Then in terms of your morning calls, mentioned BP, that one is slipping, but with the broader market actually recovered very slightly. Exane has been buy rated on that for 3 years, but bring it down to neutral given oversupply from OPEC, according to them. Then we got Delivery Hero looking to spin off their Middle Eastern unit, and that spurs an upgrade over at Stifel. That one up to buy. Little movement in that one, very slightly higher. And finally, WPP, after it won the contract once again for Unilever's main ad business, this spurs an upgrade for the stock over at Citi. They put it on a catalyst watch, positive catalyst watch, maintaining the buy rating, and that one is rising at 1% in London today.
All right, Joe Easton from our equities team, we thank you. You mentioned Boeing and the read across to Airbus or lack thereof, and we're going to dive deeper into that Boeing story next. Talks with its largest union collapsing for the third time. We'll bring you all the details next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Okay, welcome back. This is what the opening trade looks like here in Europe. As you can see, a fairly mixed picture. I can't clearly sort of come up with a narrative to fit the price action this morning. There seem to be so many moving parts that we're watching. We're watching what's happening in China. We're looking at the Fed minutes a little bit later on. We've got data coming out of the States tomorrow. The CPI print is going to be important. And then, of course, you've got what is happening on the single stock story front. And at the top of that list is what is happening potentially with Google. The US is weighing what could be a historic breakup of Google. This is a remedy potentially in a monopoly case, one of a number of monopoly cases that is being pursued by the DOJ. The DOJ is looking at forcing Google potentially to sell off parts of its operations. It's seeking to prevent it using products, including Chrome, including Android, to its advantage. It's one of the more dramatic remedies being proposed. But there's a number of different cases that we are talking about here. Bloomberg's executive editor for Asia Technology, Peter Elstrom, is in London. It's fantastic for him to join us around the table this morning. How seriously should we take this threat of a breakup of Google?
I think this is a very serious option for the Justice Department. We are in early stages of this case. Of course, we had the judge in this case, Amit Mehta, decide in August that, in fact, Google is a monopoly. It has been abusing its monopoly power in search in particular. So now the Justice Department is coming forward with some very dramatic potential remedies to this. 32-page document that lays out, as you say, a possible breakup of Google, the separation of certain operations, but also some behavioral changes that would be pretty significant for its business. As you mentioned, right now, they have a very significant presence in Chrome in particular, the browser. They can use that to direct people into their search business. Yeah. They also have the Android operating system that helps them. So there are many options here. The breakup is perhaps the most radical, but there are some others that would be pretty important for their business too.
So how dramatic could this be? We've already had some early response from Google, which was, I mean, probably not designed to be funny, but they said if you break us up, this will break us. I'm not quite sure what we're supposed to make of that statement.
Google, of course, objected to these proposals from the Justice Department. They talked about this as radical. They said that there's going to be unintended consequences. They talk about how consumers benefit from some of these integrations of their services in particular. But it is significant. Right now, the judge is only getting these proposals. We're going to have a trial next year, and then ultimately the Judge Mehta is going to make a decision later on next year, roughly August or so.
I'm trying to contextualize how significant this is. You know, we were talking about the Microsoft experience 20 years ago, unsuccessful as it was, and then we think about if you have J.D. Vance making VP, are you going to expect more of the same? And is this so much more significant than what we've seen before?
You're exactly right. There's some surprising alignment here between what the Democrats and the Republicans are saying. J.D. Vance in particular has called out big tech for their power. And to be clear, this is part of a much broader effort by the current administration to go after big tech. It's not just Google, it's Amazon, it's Apple, it's Meta also. They're even going after NVIDIA, which has really established its dominance very, very recently in the AI chip sector. So this is a serious signal. The Justice Department and the FTC have had some defeats in their efforts to kind of push back on big tech, but this is a sign of progress in what they're trying to accomplish.
Peter, I want to bring up a chart of Google's market cap and think about value within this business. If you break it up into the sum of its parts, could it be worth more?
Yeah, this is Bloomberg after all. Yeah, this is one of the key questions. There's a very good chance that if Google was broken up into different pieces, there would be a lot of value there. They, of course, have many different businesses. Search is sort of the gold mine at this point. It's always been their most powerful business. But they have many other potential businesses that could end up being quite valuable beyond that. The Android app operating system they haven't really capitalized on. They're investing a lot of money in AI. We see what's happening with OpenAI and what the valuations are there. If Google were to spin off its AI business, what would that actually be worth too? So if you're playing the market here, I think you make a good point.
My memory goes back to trips to Brussels, early 2000s, was it? Mid 2000s, to talk about Microsoft and attempts to stop it making use of its position to push people towards its other products. I think it was a media player at the time that all the fuss was about. Are thoughts about Microsoft and any read across useful here?
Yeah, well, certainly the last very big antitrust investigation into big tech was Microsoft. I think in that case, they were also talking about a breakup, as I'm sure you recall. That probably would have made the company more valuable at the time. But in the end, they did deter Microsoft from making some acquisitions and making some expansions that they had. Europe, of course, led a bunch of that charge at the time. But I think in the end, Microsoft did stay together. The operating system was not broken out. Office was not broken out. So we ended up having the company kind of remain coherent. In Google, that's certainly a possibility here, but this effort will probably deter them from doing some things that they otherwise would like to do.
Okay, so where the Microsoft threat kind of changed its behavior, is the threat of the breakup enough to get Google to change here?
I think we're already seeing that. I think Google has been deterred from making some of the more aggressive moves. And there's some speculation also that even in the AI field, they were playing it kind of careful as they were expanding in AI. They let OpenAI and ChatGPT get ahead of them in many ways. And I think there are areas we see Google maybe was pulling back from things it otherwise would have done if they didn't have this threat of an antitrust investigation hanging over their head, not just in search, of course, but in other areas too.
Peter, great to see you around the table. Thank you very much indeed for joining us. Peter Elstrom. Let's talk about what is happening with Boeing. The company has broken off talks with the unions. The strike is ongoing. How long will it last? A key question, particularly for the rating agencies who are watching this company like a hawk. Benedict Campbell joins us now on this subject. Benny, let's talk about why talks are broken down first.
Both sides basically blaming one another, Boeing saying that they were met with demands from the unions that they couldn't meet. They said we have to preserve the viability of the company, and going as far as the union would like us to, that would basically break that. The unions, on the other hand, saying that Boeing isn't budging on its previous offer. That was an offer that was made 2 weeks ago, and it called for about a 30% increase in wages and a couple of other benefits. Interestingly, that was an offer that they took directly to workers, so they sort of tried to break the impasse by going directly to the workers. That didn't go down well with the unions, and then late yesterday, after only 2 days of talks, they broke down again. So it's really unclear where they go from here and how they might be able to pick it up again.
Well, obviously, a downgrade would cost them more for borrowing if S&P goes through with it. How much more would it cost them? I'm trying to think of where the downward spiral stops, where the hope could come from for Boeing, Benny.
Well, the credit rating is sort of a key metric for Boeing, and the CFO, Brian West, he has said that they are really keen to preserve this. We reported last week that one step they are considering is raising a considerable cash, maybe via equity, something north of $10 billion, but that's probably the floor of what they need at this point. And even then, it's unclear whether a measure as dramatic as that would even help them. So all rating agencies, S&P, Moody's, and Fitch, have them on the cusp of junk. So they're just a very small step away from that ledge. And the longer the strike takes and the more it costs,
Benny?
the harder it will be for Boeing to keep it going.
Thank you very much. Thanks to Bloomberg's Benedict Campbell. Thanks for the coverage, of course, of the aviation sector. We will come back to talk more about China and its fiscal policy. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is the opening trade. Welcome back to the programme. 30 minutes into our European session. Not making huge headway to the upside or the downside for that matter on stocks. Up by around 0.1%. A pretty mixed picture across different geographies. US futures point a little bit lower. Perhaps Google weighing on Nasdaq futures. That market down by 0.4% right now. Here in Europe then, things are broadly slightly positive. Let's get a perspective on the global economy. Billionaire investor Ray Dalio does not anticipate that the Federal Reserve will make significant cuts in rates after policymakers slashed rates by 0.5 percentage point. The Bridgewater Associates founder spoke at the Greenwich Economic Forum.
First of all, I don't think you're going to get significant cuts in rates. I think the economy by and large right now itself is in relatively good balance. So if you look at where growth is, where inflation is, and so on right now, and you have a political year, I think the markets are getting ahead of themselves with expecting that, and I think the risks are more on the upside than the downside.
Let's get another perspective. Mark Dowding, CIO at RBC Blue Bay Fixed Income, joins us. Mark, very nice to have you with us. So he sees risks to the upside rather than the downside, talking there about the global economy on balance, although hard to call. I mean, hard to call seems to be the message we get from a lot of people right now.
So I think it really is. And I think it depends partly on your time horizon, because 12 months out, there seems to be a lot of uncertainty in terms of where we'll be. But I would be inclined to agree with Ray over the course of the next few months. If anything, it looks like economic data has been on an accelerating trend. And actually, with the Fed doing 50, it seems in the short term, recession risk is very low right now. It's maybe more of an issue later next year, perhaps.
So when looking out only a month, you get to the US election, of course. Do you manage to put that aside when it comes to investment strategy? I mean, this is a huge thing to look through, and yet some investors tell us, you know, we put it to one side because we expected divided Washington, or others have other reasons to do so. But how do you treat that as such a big unknown in your strategy right now?
Yeah, so I don't think you can simply run with an idea that you're going to ignore what is one of the big events of the year just ahead of us on November 5th, right? I think the way that we would be looking at this, markets would be looking at this, is if you end up with Trump winning, which, if you put a gun to my head, I'd say is slightly the more likely outcome right now, given how Dems have tended to bleed support during November and October in prior election campaigns. In that scenario, if you did see the Republicans taking the sweep, we would see that would be a more inflationary outcome for markets. It would also be an outcome that could actually sort of see equities in the short term doing a little bit better. You'd also see the dollar moving stronger on the back of that. So I think that there are very different outcomes depending on the eventual sort of election conclusion here.
So what do you do with that? Turn that into an investment?
So I think you try and focus on the ideas that you think are the most obvious to you. I mean, one of the things that strikes me is almost regardless of who wins this election, the narrative is going to be continual easy fiscal policy in the United States. There's no desire to address the debt level in the States, and it feels like policymakers have come up with this genius idea that everyone wants to pay less in tax. And so
is that a steep
why don't you
curve?
keep
So
going?
presumably that means
exactly.
Short rates down, long rates up.
Exactly. I think that eventually you end up needing more term premium in the US curve. So structurally, I think you can have confidence in curve steepening trades as an idea. So that would be something that I think that you do want to position for in the here and now. Otherwise, I'd say that in the short term, one of the things that strikes me is that in areas of risk assets, including in credit, there's been quite a lot of caution over the course of the last number of months around a potential economic slowdown, because the data in the short term looks pretty good, because I think a lot of other investors are underinvested at this point in time. I wouldn't be surprised for credit spreads to continue to squeeze tighter over the course of the coming weeks.
So if you think that Trump's inflationary, how soon do you think that the Fed would get back to hiking if he wins?
Well, I think that's a great question to be asking. And one of the things that we've reflected on in the past is how the current economic cycle that we're looking at in the here and now may actually have many more parallels to what we saw in the 1990s. And here there were a couple of episodes where the Fed started cutting interest rates in response to slowing growth, and rates only came down by 50 or 75 basis points before they went back the other way. So I wouldn't rule out at all the idea that we get one or two more cuts from the Fed. But if we do see an overtly more inflationary Trump with policies on tariffs, policies clamping down on immigration that tighten the labour market and all, and delivering further fiscal stimulus, who's not to say that in the middle of next year we could be talking about a Fed hike, not a Fed cut? It's all within the realms of possibility.
And what about monetary policy uncertainty here in the UK? You've had the Bank of England Governor Andrew Bailey saying maybe we could get more aggressive cuts, and then the chief economist Hugh Pill kind of pulling in the other direction. Where does it leave the pound? Has it seen its best days?
So I'm sure the Bank of England would really like to cut rates. It would really like to be in a position to lower rates. But the problem ultimately is I think that inflation is a bit more sticky here in the UK than we are seeing in some other major economies, largely because if you look at service price inflation, it's still tracking around 5.5%. And in an economy that doesn't have a lot of productivity growth, whenever we see wage gains, that just feeds back into inflationary pressure. So although headline inflation has dipped low over the last couple of months, we're expecting headline inflation to pick up. And it's going to be difficult for the bank to actually lower rates by very much, we think, over the course of coming quarters in light of that. And I think that the problem that the UK faces is there's not really a lot of scope, in my mind, to ease monetary policy, nor is there much scope to ease fiscal policy either. So it just looks like a fairly uninspiring growth backdrop.
OK, even though the word is growth, 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 they keep saying it, they keep talking about it. With all of that in mind, and if you think that's what the gilt markets are focused on then, this sort of sticky inflation, lack of rate cuts in the UK relative to other places, so how do you play gilts then around the budget? Because this is going to get a lot of attention given budgets and other fiscal events that have substantially moved fixed income markets.
Yeah, so from my point of view, I mean, you look at cash at 475, and you'd say that actually cash still looks more attractive than a lot of gilt yields at the current point in time. Gilts have been underperforming other markets, so they'll move with the beta of what's going on elsewhere globally. But thematically, I think it's difficult to get too bullish around UK fixed income as an asset class right here, right now. When yield curves are inverted, even when we're talking about rate cuts, you're still having to fight the forwards, and we're still in a world where cash is the high yield.
But you don't sound too concerned about, from a sort of bond market volatility perspective, by what might be announced at the end of this month.
So I think potentially concerned, yes, depending on what we hear. I think that in the UK we have it in our psyche what we saw back in 22 with Liz Truss and with Rachel Reeves looking like she's seeking to amend the OBR framework. Potentially that could create a lot of fiscal space which would actually pertain to a lot of additional supply. So I do think that she's walking a bit of a tightrope here. I actually think that she's a very smart operator. I wouldn't put her in the camp of Truss and Kwarteng. I think she does have a good handle on what she's doing, but I think it's very difficult for Labour here because their popularity rating has plummeted in a fashion that is rarely seen in terms of a new government. I mean, the approval rating for Paul Keir Starmer has gone off a cliff. So I'm sure there's some desperation to deliver some of Labour's manifesto agenda and go for growth and go for investment. But at the moment, we have to be very careful because there's just not that much space.
So about Japan. What is going on? Shiba comes through, he says, I don't want the BOJ to make a significant move in terms of the hikes. Is that tactical because he's worried about the election coming up? Is that because he wants a weak yen going into a Trump victory potentially? Do you think that really is the reflection? I'm looking at the data that came out yesterday. Base salaries rise by a record in a positive sign. What do you think happens after the US election and after the Japanese election with the BOJ?
Yeah. So here I would say that, I mean, Ishiba is a relatively inexperienced political operator.
Yeah.
He doesn't have a big support base within the LDP party itself. And of course, he's going to be sort of very focused on the elections that have been called come the end of the month. If he loses a lot of seats in this election, he may end up being out of his ear in the space of a couple of months.
Right.
So he really may not last. So that's his near-term focus. So he would like the equity market to go stronger into the election later in the month. So I think that's his focus. We've always thought in sort of dialogue with policymakers in Japan that with an election taking place, the BOJ is effectively off the table in terms of interest rates in October, and it's more a question for December or January. We've always thought a January hike is more likely because that's a quarterly BOJ meeting where they'll be updating their forecasts. But the one interesting thing about October that hasn't been spoken about much at this particular point is that one of the topics being assessed, I think, by the BOJ is could they leave interest rates where they are, but actually look to tweak their BOJ purchase schedule and their exit from very stimulative QE policies. In many ways, it's remarkable. Japan had this thing, yield curve control, and many of us were very scared that any attempt to exit this would be very messy. And they've done a very good job. Yields have gone down, not up. And so that could actually speak to them having an ability to actually go a bit faster in reducing their BOJ bond purchases. So the Rinban schedule will be the thing we're looking for at the BOJ at the end of the month.
Be interesting to see what impact that would have on global liquidity. Nice to see you, Mark. Thank you. Thanks for stopping by. Mark Downey, CIO at RBC Blue Bay Fixed Income. Thank you very much indeed for joining us. Coming up, got a few problems over at Perrier, why one of the world's best-known mineral waters has put the water industry firmly in the spotlight. More on that story next. This is Bloomberg.
make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to the opening trade. We are nearly 45 minutes into today's session. Stock 600 higher, nearly 0.2%. The FTSE 100 doing better, 0.4% higher. We're digesting the announcement of an announcement from China on the fiscal picture on Saturday. But let's take you to our big take now. As the global water business grapples with questions of sustainability, one of the world's most famous brands is facing increasing challenges. Perrier suspended production and destroyed 2 million bottles in April on worries about contamination. The story is the subject of today's Big Take, and here with us with the details is Bloomberg's Dasha Afanasieva. Dasha, this is making me parched just talking about water. What's Perrier and Nestlé doing about these problems?
So it's not that Perrier has suspended production. It suspended one of its wells when it was found to have contaminants, fecal contaminants. And apart from that, it's come up with some longer-term solutions, which is to overhaul its production, to modernize. They've invested around 150 million euros to get things going so that you're sort of cleaning through the pipes and you don't have contaminants involved. They're also encouraging organic farming rather than pesticide farming. That's been the case for a long time. That's all on the good side of what they've been doing. I think kind of on the bad side is that in 2020, when they realized internally they had a change in management, they realized that Perrier was being cleaned using illegal methods, charcoal and UV filtering. They're illegal for mineral water because it's supposed to be almost untouched. They didn't tell the public. They kind of, behind the scenes, negotiated with regulators and did all of the stuff behind the scenes. And earlier this year, it all kind of came to the fore in a leaked report.
What does this mean for Nestlé? What is Nestlé doing about it? Nestlé's the owner.
Nestlé is the owner, and its water business, even Perrier plus some other brands, isn't a huge proportion of its sales. It's only about 3.5%. So it's not huge in that sense, but I think it's a reputational issue because Nestlé's had its problems with reputation. We had the infant formula scandal that started in the 1970s. More recently, there were really tragic cases in France of E. coli contamination in a frozen pizza. So for Nestlé, it's about how do we get the trust back of consumers. And we know that Mark Schneider, the former CEO, was ousted in August. So some might look at this and say, there are operational execution issues at Nestlé.
And what about the sustainability of the water business overall? I mean, as people think about sustainability more and trying to use bottled water less in some areas, is this seen as a growth category?
Yes, it's a really big growth category because it's seen as a healthy drink. It's definitely better than sugary sodas. But reporting on this question came up time and time again, particularly if you're in France and you're having to filter water because, of contaminants and because of particularly climate change making those worse because you either have droughts or you have torrential rain. And then you're sending that water to the other side of the globe. They've had this product called Maison Perrier, which makes no secret of filtering because it's not a mineral product. And you sort of wonder, should all that water be packaged up in plastic that can sometimes leach into the water and get all these carbon miles being sent to the other side of the world? And I think that's the fundamental question and an existential threat, perhaps, for the industry as a whole.
Dasha, thank you very much. Thanks for bringing us the story. Dasha Afansieva with the latest on Nestle, on Perrier. Really interesting story on the Bloomberg Terminal and on the website. Let's focus back on some of the items on our trading agenda today. We have some data out of the United States in terms of mortgages. We have inflation data from Mexico, from Brazil. Crucially, we get Fed minutes a little bit later on. And from a UK perspective, here in Europe, we're going to be seeing the UK Chancellor Rachel Reeves meeting bank chiefs from Barclays, HSBC, Lloyds, NatWest, Santander, etc. So that's going to be one focus on the UK.
What do you think that conversation is going to look like? What are they going to be asking for? It feels like we're into the final stages of budget planning. Is this about them going in there and saying, can you just put a more positive spin on it? Or is it about them going in there and saying, please don't raise taxes? You do wonder which side of the coin they're ultimately going to be coming down on.
Well, think about what Kit and Eric have said to us. It sounds like what people want is just for her to sound credible. Don't sound like you've drafted this on the back of a fag packet. I was thinking about her credentials. There's a lot of talk about how Rachel Reeves is an ex-Bank of England economist. Someone pointed out to me that she has as much experience at the Bank of England as Matt Hancock, the former Conservative minister. You have been looking at her CV, Guy.
I have. Yeah, there's plenty of fact checking going on. The real, I'm not sure the Bank of England stuff, how relevant it is. Does it mean that she can run the economy better? I don't know. Yes or no. It's about sentiment at this point, though, isn't it? It's about how this economy is actually performing. In some ways, they have inherited quite a decent economy.
Exactly.
And I'm wondering whether or not actually what they're doing at the moment is detracting from that. And maybe that's the message the bankers bring, which is get on the front foot, sound positive. Is there a message to them coming in here and saying, actually, here are some positive things that you can do? I'd be fascinated to see what the tone is, given the fact that this is an economy that should be doing better than maybe the data suggests that it is.
The way to do that is, in my view, to separate the fiscal outlook from the economic outlook. And the fact that they've been lumping the two together as doomy and gloomy over the summer is where the problems have laid.
Well, we'll see how this... We've got the investment summit, then we've got the budget, lots of occasions to zoom in on the UK. Let's think about something else on our agenda. We mentioned as we were just going through the trading day that we'll get Fed minutes. So let's bring in our colleague Valerie Teitel, who, of course, is never far away from any Fed conversation. And she's here on set with us this morning. Val, so we've been thinking about Fed minutes, and you could say this is going to give us a huge amount of insight into how much consensus there was around 50 basis points in that cut, or how much Powell was out on his own. But will we really get that from the minutes? What are you expecting?
Yes, the minutes are going to show that there was some debate around the 50 or 25. We know that for sure. That was obvious in the dot plot that came out in their projections. But I think there's a risk of these minutes sounding hawkish to the market, because remember this meeting happened before those revisions to GDI that showed personal spending coming down, before the hot payroll report. So there probably was an attitude from the Fed that we wanted to not let the market get ahead of itself on a possible string of 50s to come. We want to pair them back again and somehow send the message in the minutes that it was very much a close call.
But the payrolls have already positioned us for that, haven't they? How hawkish are they going to be? If you didn't have the payroll number, they would sound hawkish. But you plug the payroll number in, the market's moved quite significantly already.
Yeah.
Are we already positioned for a more hawkish-sounding set of minutes?
Yes, that's very possible, Guy. But, the recent Fed speak that we have had has always talked about this balance between inflation and unemployment. Everything seems a bit more balanced now. Now, we do get CPI tomorrow, and the risks to the upside of inflation. Jamie Dimon was talking about the possible upside risks to inflation that are on his mind, but we haven't heard that from the Fed members, and I think we're a bit far away from hearing that from Fed members directly. We're going to need a string of 0.3 month-on-month CPI prints in order to tempt the Fed.
How likely is that?
Well, at the moment, the estimations for tomorrow's month-on-month print is 0.1. So we would probably need, at least two back-to-back 0.3 CPI prints, because a 0.3 would take us farther away from this 2% goal of the Fed. So, that could be, the next story to come, but I think we're a bit far away from pricing in, a pause or a skip. Let's say.
Yeah, Jamie Dimon's saying that he is still cautious on inflation, but the Fed right to cut by that 50 basis points last month. I do wonder how many of them are in the regretful feeling about going for that jumbo hike. But as you say, really, it's more about CPI surely than the Fed minutes tonight.
Well, CPI tomorrow, it's going to catch a lot of people's eye as well. The Fed minutes, yes, they are reflexive, but, knowing a bit more about what went into their thought process is going to guide us maybe if we get more data to come that comes a bit weak, right? How many hot data prints do we have to see in order to see a change of language from the Fed? That's definitely going to be on our mind, and with CPI this week, that's one of them.
It was a really weird run-up to that last Fed meeting where we saw that, the market thought it was going to be 25. They were in the blackout period. And then we got these comments in the Wall Street Journal, or this story that looked on one level kind of balanced, but was certainly making the case that we could see 50. And the market started to say, okay, we see what's going on here. I wonder if we get any sense of that backstory coming through in the minutes.
Yeah, the drama that was before the meeting, always looking out for some leak about what they're possibly going to decide. But, I think the Fed speak to come is still going to be on a narrative that the Fed is cutting, the Fed put is still there, that they would maybe look through a string of hot prints and still talk about risk being balanced, cutting to come. And I do think that's going to push equity markets, tempt equity markets back up to all-time highs. This is a really positive outlook for risk. Generally, we have the Fed easing and we have the U.S. economy, on a good path. You were mentioning the Atlanta GDP Fed now, still 3.2%.
We've got a hurricane coming and we've got an election coming. I'm just wondering if the market is looking at the wrong thing right now. This all feels kind of fairly rearview mirror. The data on CPI is going to be fairly rearview mirror. What is the potential for the kind of where we are now positioning to be upset by some of these other factors? How vulnerable is the market at the moment in terms of its setup?
Well, you could think about the hurricane in a way that we won't necessarily get a clean jobs print for a few months now. And, given the labor market was of a focus for the Fed, that would be the thing to tempt them to cut more aggressively. That could make for some choppy markets into the end of the year, possibly.
Absolutely. And the election, the big election, everybody seems to be discounting it and saying we can just look through it. And actually, we're going to get divided government, and as a result of which, it's not going to be a factor. Valerie, thank you very much indeed. Valerie Teitel. We are going to be looking forward to that. That's going to be one of the themes that we're going to be watching. This time tomorrow, Milton will have made landfall.
Yes, exactly. And so with trepidation, we look ahead to that. We'll watch from a market perspective, looking at cat bonds, looking at citrus prices, of course, but from an everyday disruption perspective to businesses in Florida, this is going to be huge. We've seen theme parks closing. I know SpaceX had to delay one of their launches. We could be dealing with power outages. An emergency situation called in 51 counties.
But it's a major metropolitan area. That's
Tampa.
The difference this time around. LN caused widespread damage. This could hit a major metropolitan area, and we haven't seen. Tampa hasn't been hit for 100 years.
Yeah, home to a big port, the biggest port in Florida, actually, a major U.S. military base. JP Morgan's got 6,000 people in its office there. It's significant.
And as we were hearing from our colleague Mary earlier on, how wide the winds, the strong winds go is going to be a real deciding factor as to how widespread that damage is, and in terms of how widespread the storm surge is as well, because that seems to be something that, from an insurance perspective, we're watching very closely. That is it for this hour of the programme. Plenty more coming up. Jeff Curry, Chief Strategy Officer of Energy Pathways at Carlisle, will be joining the Pulse. That's in around 30 minutes' time. Lots to discuss there. Oil prices 77.78 on Brent, up by 0.8% this hour. That is it for the opening trade. The Pulse is up next. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Was going to keep Real World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse.
The spirit of "we'll figure it out" is my favorite thing to hear among early startup team members. A lot of things go wrong. The situations that startups win in tend to be incredibly dynamic. And so this idea that even if I'm not qualified on paper, even if I haven't solved this problem before, even if this problem feels like it's going to kill the company, which many problems will feel that way, this spirit among the team of, you know what, we've got the people we need, we're going to figure this out, we're going to get this done, that's super important. Another thing that I love to hear from early team members is, I've got it. So, you know, you hear in big companies a lot of people say, that's not my department, someone else is going to do that, or, you know, ooh, this is really bad, this is going to hurt us. And you want people who just step up and say, I'll do it, I've got it, don't worry about it. You want people that have a bias towards action. Startups, especially in their early days, often win by moving very quickly. You never get as much data as you'd like, you never have as much time to deliberate as you'd like, and you want people who are willing to act with much less data than they like to have, with much less certainty. And then if they act and it doesn't work, they adapt really quickly and try something else. We talk also about the blessing of inexperience. We have seen many of our startups do incredible things because no one told them it was hard, or no one told them they can't do it. There's a great quote from Steve Wozniak about how all the best things he ever did came from having no experience whatsoever and having no money. And, you know, that obviously is not always true, but there is a magic thing that happens with startups, especially in their early days, before they've learned they're not supposed to be able to do certain things. And so I think as a startup, again, it doesn't work to have everybody be inexperienced, but you can take more bets than you normally would on inexperienced but super high potential people. That's the end of the topic on team. One of the most important jobs you have as a founder is to never lose momentum. And this is a little bit depressing because it means for the first few years, you never get to take your foot off of the gas. You never get to really rest. We try to be honest about this, that startups are not the best choice for work-life balance at all, but especially in the early days. Startups survive on their own momentum. If you have momentum, people keep delivering results beyond what they think they're capable of. If you lose momentum, it's very difficult to get it back. And so continuing to make sure that the startup has a cadence, that the startup keeps winning on a relatively short and predictable intervals, this is really important, and it's up to the founders to make sure that you don't lose a hold of this. Another thing that we think startups need is a competitive advantage over time. Now, this is something that sounds so obvious, I hesitated to even put it in. This is well discussed, but we're seeing more and more startups apply to YC, and when we ask them, so what is the long-term monopoly effect here? What is the long-term competitive advantage? What is, where is the network effect in this business? They look at us like it's the first time they've ever heard this question. All of the really great businesses I know have an answer to this question. And in fact, the better they are, the more they pretend not to. But this is something that you want to have a plan for. Another thing you want to have a plan for is at least a sensible business model. You don't have to have it all figured out at the beginning. But when we ask founders, so how are you ever going to make money? And they look at us like it's the first time they've ever been asked that question, which happens more often than you would think recently. That's a bad sign too.
And after the payrolls last week, look, there is no free lunch, right? Clearly, if growth is pretty strong in the US, if you have full employment, the Fed won't cut too much. But again, CPI tomorrow will be quite important. As long as inflation is under control and tracking this kind of Fed target, the Fed has no reason to stay restrictive, right? So they will have to calibrate rate cuts depending on the inflation, and the market may have to price the risk of inflation coming back at some point. But right now, we're seeing you have, across the board, enough evidence of disinflation for central banks to cut, which is better than nothing, right?
Emmanuel, thank you so much. Let's also get a full briefing on what's happening at the DOJ. Let's bring in Parmi Olson from Bloomberg Opinion. Parmi, of course, is an expert on these things. So, Parmi, good morning. How significant is this latest Google antitrust development?
Good morning, Francine. Yeah, I'd say this is pretty significant. It's the most significant move since Washington tried to break up Microsoft about 2 decades ago. Interestingly, we have a lot of proposals on the table from the DOJ. It's almost a sense of throwing spaghetti against the wall to see what's going to stick. They are proposing the divestiture of Chrome or of Android and or of Google Play. That's the App Store. All those proposals are on the table. There's also the proposal to force Google to provide access to the underlying data that it uses to build its product, something that has actually raised some hackles in the industry. And there's also a proposal to stop or restrict Google from investing in other competitors and potential rivals, which is an interesting one, I think, because in the last year, as the AI race has really heated up, we've seen some of the most promising AI startups get hoovered up by large technology companies, but they're not strictly acquired. They are acqui-hired, so they hire all the staff in the company and then they spend a lot of money on licensing. So it's effectively an acquisition, but it's a clever way to get around antitrust scrutiny.
But Parmi, could a breakup of Google actually happen if you look at what we're seeing pre-market? I mean, the stock is barely moving.
Yeah, and I think that's a good reflection of what we've seen just over many years, which is that these companies like Google and Meta Platforms and Apple and Amazon, they're all very, very good at kicking the can down the road when regulation comes their way. I mean, that's why we've had really no federal law from Congress to regulate these large tech companies, whether it's an antitrust measure or something to regulate the harms of social media, because these companies have armies of lobbyists and legal teams. And of course, with this case, there is already a plan to appeal it. There are other similar antitrust cases that are on the table for Google with plans that it has plans to appeal those cases too. So I think that's one reason why there's a little bit of skepticism in the market that this is really that big a deal. But I think, I wouldn't completely dismiss it, because if you talk to people in antitrust circles, they say a year ago it would have been crazy to use this term structural remedies, which isn't just a jargon for a breakup. So there, in that sense, there really is what they would call progress. There is a much more momentum behind these efforts, and I would just say maybe that there's a possibility that something could happen if there is pressure from not only civil society, but regulators in Europe. That's one of the things that antitrust campaigners are pushing for, that for the U.S. to really make this work, for the DOJ to make it work, they need a little bit more help and support from governments in Europe.
Parmi, thank you so much, as always, for the terrific briefing. Parmi also there from Bloomberg Opinion, also with a new book out, which I recommend to everyone to read, called Supremacy, which is on AI, on DeepMind. but also OpenAI. Now, still with us, Emmanuel Coe from Barclays. Emmanuel, we're talking a little bit before about the pitfalls of some of these tech stocks. We were also talking about the fact that you're still expecting a soft landing in the U.S. Now, yesterday we spoke to Jamie Dimon, and he really played up the U.S. book. He says there's so much more value in the U.S. than the EU. When does Europe catch up?
Well, we still don't know. I think there is a case for Europe to perform better cyclically if everything goes well in the world, right? So the structure of the index in Europe is very cyclical, right? So we saw that 2 weeks ago with the Chinese stimulus. Europe was the best market on the week. So you can have some catch-up if the global growth environment is improving, and most importantly, if China is really picking up. But I think structurally, we still believe that U.S. is where you want to be invested for the long run. You have a strong tech sector, which so far is dominant globally, but you also have a chance for non-tech equities to catch up if this soft landing is coming through. Right?
Let's listen to what Jamie Dimon told Lisa Abramovitz.
NASDAQ or New York Stock Exchange, they're just more attractive places to go, and we'll see how that pans out. I'm not in favor of just advancing in the United States at the expense of Europe. But I do think that Europe needs to focus on Mario Draghi's report. There are a lot of things in there that they need to do to get productivity back and growth back and markets back. They need the capital markets union, for example, which they've been talking about for years. They actually do really need it to foster growth around European countries.
But Emmanuel, at the same time, we're seeing quite a lot of weakness in data. So does it give more scope for the ECB to be a little bit more accommodative than maybe the Fed is?
Yeah, hopefully, because there is no much to hope for in Europe. You have a lot of this political fragmentation, which makes structural reform very hard to deliver, and you have little fiscal capacity. We are seeing in France, in Italy, talk about higher taxation, weaker spending on the back of that. So you're left with the ECB as the only potential source of growth. And yes, we do believe that the ECB has to do more. We can talk about how much the Fed should be cutting if growth is very strong in the US. I think there is less and less doubt that the ECB has to cut, and not so much for the good reason, because growth is quite weak, inflation is coming down as well. So ECB should help, and that's why we think that maybe from a tactical standpoint, being tilted towards European exporters that could benefit from a softer euro and somewhat stronger global growth might be the place to be.
Europe, so you're looking at industries, or are there certain countries that also look more attractive?
No, look, I think the trend for the past 12 months was to be long European banks, long defensive sector like utilities, real estate. We think now we should go back in some of the China plays. So we've been very bearish on auto sectors. We still believe the sector is challenged, but we closed our underweight last week. We think as some of the exporters like semiconductor, chemicals, materials as well, might start to look interesting again if market is getting more comfortable with the global growth environment. And on top of that, ECB is cutting enough to put the cap on the euro dollar.
Emmanuel, thanks so much. Emmanuel Coe from Barclays stays with us. We'll talk a little bit more about currencies and some of the things, of course, that could be changing in the next couple of months. Coming up, Kamala Harris ramps up pressure on rival Donald Trump after a new report claims he helped Russia during COVID. That's next, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I can't run for president, and there was no opening. I mean, there's no way that it was even possible. So it's a little flattering, but I just want to help our government do the right stuff. I think there are a lot of things to do to make America far better off, and particularly because I've mentioned this many times, a lot of things we've done which I think are bad, whether you're Democrat or Republican, we support. It's often done in the name of good. Have hurt the lower 20%. They're dying younger. Their income didn't go up for 20 years. They're the ones who have more crime in their neighborhoods. Their schools don't work. We should acknowledge that as citizens and do something about it. Like I said, a lot of policies put in place have the exact unintended consequence, and that's where they hurt. Like, for example, growing the economy well, the people who help the most at the lower end. And I think we have to be very clear-headed about how we can accomplish what we want to accomplish to lift up all of America.
You haven't endorsed a candidate. And I wonder why. Is it because you think as the leader of a big company you've got to work with anyone? Or is this just that you can't decide this particular time around?
I will decide, okay, and I will vote. I reserve the right to do whatever I want. Okay, I'm a citizen. I can vote. I can say what I want and stuff like that. I've never been in the pride of endorsing candidates, and so, but I'm thinking through what I want to say or do or something like that.
Well, that was the J.P. Morgan Chief Executive Officer, Jamie Dimon, speaking to Bloomberg's Lisa Abramovitz here in London. Now, staying with the U.S. election, of course, Republican nominee Donald Trump is this morning in the headlines after being accused of sending Russian President Vladimir Putin COVID-19 testing devices during the height of the pandemic. Now, his rival, Kamala Harris, said the news summed up who Donald Trump really is. We're joined by Bloomberg senior writer Stephanie Baker, who also has a book out on Putin that came out a couple of weeks ago. So, Stephanie, good morning. Emmanuel Co is also with us to try and understand the risk and the opportunities for the U.S. economy on the back of the election. But what's the significance of Trump and Putin talking after he left office?
Well, this just raises more questions about the relationship between Donald Trump and Vladimir Putin. It's more significant than, in my mind, sending COVID testing equipment to Russia, which we knew about, that it had been an announcement. We didn't know it was for Putin's personal use. But more significant is the fact that they were talking as many as 7 times, according to this report, after he left office, and including earlier this year when Trump was lobbying against additional aid to Ukraine. And so I think this is going to be a huge question going forward. There'll be attempts to confirm this. So far, the Trump campaign has denied that this happened. But if you remember, in the debate with Kamala Harris, he made a cryptic remark saying, "When I last saw Putin after I left office." And that left a lot of people questioning when were they in touch?
So, Stephanie, I mean, does that matter to the voters of the U.S.? Do we know what they told each other in these meetings? Because I guess it's not unusual from, sitting presidents and former presidents to talk even once one leaves office.
Sure, it's not unusual, and Trump has met other world leaders, including Viktor Orban of Hungary and Netanyahu, but that has all been in the public sphere. There's been no attempt to hide it. Yeah. And I think the fact that this has been kept behind closed doors, not disclosed to the public, makes it all the more suspicious as to what's really going on here. We don't know what they discussed. I do think it will play out in the U.S. election. It will be another line of attack that Kamala Harris can use, and we saw that she did that already, both in the 60 Minutes interview that she did on Monday night and the Howard Stern interview, saying if Trump were in charge, Putin would be in Kiev. And I think it's a real dividing line. It's something I did cover in my book, that Trump does have a different relationship to Putin and was against sanctions, for instance, on Russia, despite what his national security advisors were telling him to do.
Stephanie, the polls are so close. What's at play in the next 4 weeks?
It is so close. I mean, you do see a more recent New York Times poll that came out yesterday with Kamala Harris pulling ahead, but Trump still leads on the crucial question of the economy, which I think is going to be the deciding issue in this election. And I think all eyes should be on the state of Pennsylvania. Kamala Harris has to win Pennsylvania. It's very difficult for her to get to 270 electoral college votes without winning Pennsylvania. And in there, it's a virtual dead heat. It's very hard to predict.
Stephanie, thank you so much. Stephanie Baker, Bloomberg senior writer. You'll be seeing a lot more of her, of course, on TV covering the election, and also author of Punishing Putin. Emmanuel, I mean, no matter how you slice this, I mean, this is not only politics. This has a direct impact on what kind of U.S. economy we'll have, be it trades, tariffs, or extra spending. It's too soon to call, so how do you do it for, tactically buying equities or not?
I think we have very little risk exposure right now, directionally, in terms of thematic approach as well. I mean, as you said, I think a lot of the macro outlook for next year, the investment outlook, will depend on the outcome of the U.S. election. I don't speak to many investors who have strong conviction on what is going to happen. I think they know how to position once we know who is going to be in charge and what is going to be the Congress doing as well. So I think people will be on wait and see. But if you look at the typical market behavior into the U.S. election, is pretty much flat to down. So the market always struggles into the U.S. election and usually rebounds afterwards once we have some clarity. I think the main concern for many market participants is the risk of unclear outcome, right? If the election is contested in particular and take us into January without knowing who is going to be the next president, that would be, I think, the risk of scenario for market. As it stands, I think people are a bit more nervous about Europe, China, the rest of the world if Trump wins to win the election.
And Emmanuel, you were very clear. It's basically trying to keep it simple, right? Given all of these outside risks coming from everywhere. We mentioned China, we mentioned the U.S. What are you expecting in terms of earnings season? So we start with the U.S. Thursday, Friday, and then we get onto European ones. Does that make a material difference to where you want to be invested?
I'm not sure. I think it's going to be a tricky one. I mean, clearly you have seen a number of profit warnings. Growth was pretty mixed in Q3, so I don't think people who should expect great numbers and much more clarity from companies. We're going to see dispersion within the market. As I said before, we are willing to re-engage with cyclicals, which have a global exposure, whether it's China or US, and we like those which have already gone through some kind of clearing event and had a bunch of resetting expectations.
What about the UK? So we have a global investment summit on Monday coming up in a couple of days, and then of course it's budget day, October 30th.
UK is a hot market again. We're seeing global investors looking at it, and the domestic economy is showing sign of life. We are seeing this rate cut, this disinflation, supporting consumer. I think the big one is what is the government going to come with on the 30th of October? Are we going to see some kind of fiscal tightening that would, again, raise the question about growth outlook in the region? But I think there is some appetite to go back in UK on the back that now you have political stability. You may see some kind of softening Brexit as well. And again, broadly speaking, you have this support from the central banks in the backdrop of a very strong labor market.
Emmanuel, thanks so much. Emmanuel Couder from Barclays. Now, coming up, Gucci has named a new chief executive to help lead a turnaround for the luxury brand. We'll have details next. And this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Now, the Pentagon says a U.S. visit by Israel's defense minister, Yoav Gallant, has been postponed. Well, Bloomberg has learned it's because of last-minute objections from the Israeli Prime Minister, Benjamin Netanyahu. Now, Axios is reporting that President Biden is due to speak with Netanyahu later today. The French government has survived a no-confidence motion brought by leftist lawmakers. Now, the motion received just under 200 votes, far short of the 289 needed to topple Conservative Prime Minister Michel Barnier. Now, the socialists say President Macron should have appointed a premier from the ranks of the left-wing coalition since the alliance won the most seats in July's snap election. And Brazil's Supreme Court has authorized the reopening of social media platform X after chief executive Elon Musk complied with its demands. Now, those included removing some user accounts and appointing a legal representative in the country. The order ends a feud between Musk and Brazil's Supreme Court, which had gone on for a month. And Kering has named Stefano Cantino as the new Gucci chief executive to lead a turnaround at the French luxury group's biggest label. Now, he will assume the role on January 1st. High-end goods have been suffering from cooling demand, particularly in China, while Kering shares are higher this morning. Coming up, we'll be hearing from Jeff Curry, Chief Strategy Officer at Energy Pathways at Carlyle. We'll be getting his views on China stimulus, a read across for commodities, but also we'll talk about some of the hurricanes in the U.S. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. The U.S. Justice Department weighs breaking up Google as a remedy for its monopoly case. Well, Google says splitting off Chrome or Android would, quote, break them. Hurricane Milton regains Category 5 strength as it continues towards Florida. We'll have the latest live from Tampa. And oil edging higher as hopes rise for more stimulus in China. We'll speak with Jeff Curry from Carlisle later this hour. Now, Hurricane Milton regained Category 5 strength, with residents fleeing the coastline ahead of its expected overnight landfall. Now, President Biden warned that the hurricane is likely to have a severe impact.
The current path of the storm is expected to Tampa Bay area and cut directly across the state, east to west, all the way across the state, with the potential for this storm to both enter Florida as a hurricane and leave Florida as a hurricane on the Atlantic coast. This could be the worst storm to hit Florida in over a century. And God willing, it won't be, but that's what it's looking like right now.
Well, let's bring in Rena Roy from ABC News in Tampa. Rena, thank you for joining us. I mean, it's expected this storm to inflict widespread damage and put lives at risk. What's the latest on the ground?
Yeah, well, Francine, I can tell you that 6 million people across 11 counties right here in Florida are under mandatory evacuation orders, with Milton now just hours away from making landfall. It is expected to hit as a Category 3 or 4 hurricane late tonight into tomorrow morning, bringing up to 18 inches of rain and a record storm surge of up to 15 feet in the Tampa Bay area. And it has the potential to be one of the most destructive hurricanes on record for the state of Florida. It is unclear where exactly landfall will be, but at last check, the path was veering slightly more south towards Sarasota. The governor says the National Guard storm mobilization is likely the largest in state history, with thousands of troops activated. 34 search and rescue planes are on standby, and 37,000 linemen are either in Florida or they are on the way to help with power outages. And some areas, including Charlotte County, which is just south here of Tampa, have extended evacuation orders at this hour. They're moving further inland because of storm surge concerns. Francine?
Rena, thanks so much. Rena Roy there from ABC News. Keep safe out there. Now, oil edging higher after tumbling the most in more than a year in the previous session. The market, of course, monitoring developments in the Middle East, as well as a new fiscal policy briefing from China. So for more on all of this, we're joined by Jeff Curry, Chief Strategy Officer of Energy Pathways at Carlisle Group. So, Jeff, thank you so much for joining us. Just to make it clear, I mean, Hurricane Milton should not touch anything, any of the implications. So we can remove that to one side, certainly when it comes to the price of oil. The Middle East, though, is a huge concern.
Absolutely. And, you know, to borrow
Javier Blas' term in his recent piece is the potential mother of all oil supply disruptions. Because we're not only talking about, Israel striking energy infrastructure inside of Iran. Once Israel does it, it opens up, it gives the green light to Zelensky to do it to Russia. And then the retaliation coming from, Iran into the other side of the Gulf or Russia it just opens up a can of worms that we haven't seen since the 70s.
But Jeff, the market is, largely shrugging it off. So what's going on?
Yeah, I think it's to the broader point that the market in oil commodities more broadly has been unwilling to hold a position on anything, whether if it is, look through the current, uncertainty around China to see for the stimulus as it's going to improve. And I think it goes to that short-term, near-term myopic approach of trading oil. Where do we see the positioning in oil? It's in the options, which is part of the reasons why we see big moves like yesterday, down 3, up 3, that kind of moves, because you do have positioning in the options because it's the easier way to hold the position. But overall, open interest in oil, it's at a 1-year low. The market's not long, it's not short. Positioning is really weak.
Okay, but so by your calculations, first of all, what's the risk of a significant supply disruption? And, could oil just go to $100 all of a sudden?
It's never been this high in our lifetimes. Well, I wasn't around in the 70s to, trading oil at that point in time. But in the time I've been doing this for 3 decades, I've never seen it this high. And I think, one of the differences, we have more transparency of it, and we can find out when it's going to happen and know what the infrastructure that could be hit here. And by the way, it's more likely to be refineries than it is to be, upstream oil assets. But I think the key point here is, it's never been this high of a probability. And we're talking low inventories.
So you think it's never been, the probability of a significant supply disruption has never been so high in the last 40 years?
It's probably in that 30% plus range, if not higher. And we look at the complacency of the market, both from the disinflation narrative. We look at positioning in oil. But let's take the war out of the picture. The underlying demand dynamics in oil are very supportive right now. You have, let's start with the U.S. You just had rate cuts on top of, a gangbuster jobs report. The dock workers just got huge pay raises, so that's U.S. You have liquidity going up. Let's turn to China, a stimulus package, liquidity going up there, even a growth impulse coming out of Europe. You put the three together, you have global liquidity turning up, growth impulse turning up. That's the ideal time to buy commodities.
Right, but so are you telling me that oil should be at $100? If you're saying there's a 30% chance of a severe supply disruption, the market just doesn't make sense.
Take the supply disruption out. The market should be trading in that $80+ range. So, I think you put that supply disruption on top of that. How do you handicap that? We should be sitting, at least $10 higher than where we are right now.
So should OPEC Plus actually delay their production increase that they're expected to do in December?
Well, if we look at overall demand, it's improving. That the market is in a deficit. That's the part that the forward curve is backwardated. There's this belief of this oil supply glut, but the evidence of it, I think, is not that substantial. And I think the bottom line is, the overall demand is above supply. There is room for them to bring on that production.
Even next year?
We don't know. Like when we look out over next year, the forecast of that surplus keeps coming down. The EIA put one out yesterday of 200,000 barrels per day. That's getting close to zero. But how do we know what's going to happen to Saudi Arabia? Are they going to replace Iranian production in 3 weeks' time? We don't know those things. And so I think taking a strong view, we're in a surplus because fears around Chinese growth when they just, hit the stimulus button, and the onshore people believe it more than the offshore people. You look at production in the U.S., it disappointed yesterday. It came back down. So that growth is not materializing. And then we look at the spare capacity in places like Saudi Arabia. It could be swapped out for Iranian production in 3 weeks' time. So why is this bearish impetus in the market is beyond me.
But Jeff, Jeff, I mean, when I hear you speak, there's nothing really that the market is getting right about this, right? Not the oversupply next year, not what's happening now, not the pricing.
I think what's going on is it's too hard to hold the position, and they don't want to hold it. Up, down, $3 a day, that type of volatility. It's easier for me to sit here and talk to you about it than to actually somebody trying to hold the position.
Right. But, so when does that change? Again, if we talk about a war premium, what needs to happen for that to
I think
be
that the market's in that show me mode. They actually want to see it. They're not going to price it in until they actually see it, which unfortunately will be too late. And I think that it's the same thing in some of the other markets, like copper and the rest of them. They're in that show me. They're unwilling to hold a position until they see the fundamentals. They got to see it actually happen before they put it on. It's that momentum, the momentum type strategy. So it's not there right now. Instead, it's this as opposed to that.
What happens if oil goes to 100? What happens to the U.S. economy? Does it unravel? Given we've had concerns about inflation going up after that blowout jobs report as well.
Oh, I think obviously it would have would send yields back up higher and have an impact on the equity markets. But in terms, let's remember the U.S. is long oil. $100 oil will be good for the U.S. economy. That's the net. It exports oil. It's no different than Saudi Arabia, and that's part that I just lost on me.
but it changes U.S. elections, doesn't it?
Yes, it changes U.S. elections. And I think that you look at the voting patterns in the U.S. and what's important, inflation and economic growth are sitting there at the top, and other issues like foreign policy are at the bottom.
Okay, Jeff, thank you so much. Jeff Curry from Carlyle Group stays with us. We'll talk a little bit also about gold and copper. Now, these are also live pictures of the BNEF Summit in London, a flagship event where energy, finance, and technology discussions converge. And our very own Tom McKenzie is in conversation with Guido Brusco, the Chief Operating Officer of Eni. Now, terminal subscribers can follow that discussion about the energy transition on Live Go. This is Bloomberg.
So we talked about the difference in terms of your strategy versus some of your European competitors. We know that BP and Shell have been walking back, or at least, very least, rethinking how much they want to be investing and how much they want to go back to the core parts of the product. Arguably, your US competitors have done essentially nothing on the renewables front. Is that setting them up longer term for a missed opportunity?
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Welcome back, everyone. Now, we were talking commodities, we were talking oil with Jeff Curry from Carlyle Group, and he's still with me. Jeff, thanks so much for sticking around. Look, we're talking about the Middle East. We're talking also about the dynamics of how much oil the U.S. actually produces. What's your take on copper? Again, this is a story that's very much tied to China and the new stimulus coming from there.
It is the oil story upside down. Copper is long-term bullish, and all the investors buy the long-term bull story. In fact, 5-year copper after the stimulus announcement hit an all-time high. Near term, there's a surplus, and it's being driven by the fact that smelter production of refined metal is higher than the mine production, which, by the way, is unsustainable. That's helped create a surplus. At the same time, you had weak Chinese demand during 2Q and 3Q. So the question is, how quickly will this stimulus eradicate that current surplus and make that longer-term story true? Which, again, is just the opposite of what we have going on in oil. Our view is this is the real deal. It's a shift by the government, and if they're not taken seriously by this, then it's saying that their credibility is being shot. And I think you look at the Shanghai Composite; it was down yesterday far less than the Hang Seng. It tells you that onshore they believe him, offshore they don't. And I think the what matters is the onshore group. And I think the way somebody put it is, before there was the concerns that Xi Jinping was idealistic in this. Now it's very clear he's pragmatic, and that he's putting a floor on that property market. If he puts a floor on that property market, then all that investment in green CapEx goods begins to start driving growth, and I think that's the case right now, which will tighten the market and put upward pressures on near term.
But Jeff, so where do you think we are in the demand cycle for copper?
Oh, this is just chapter one of the story of green transition. When we think about energy transition, copper is the bellwether. I like the statement they say is, copper is the new oil. When we think about, Dr. Copper, what is he a PhD in now? Environmental economics, and he's telling us what's going on in, the energy transition. And I think at this point right now, demand everywhere in the world is positive. It's turning up. The IEA published a report about renewables yesterday, and you can see it turning up everywhere in the world. And I think the one thing that came out with China is they've already hit their targets on renewables and are continuing to go ahead. And I think the big issue is grid. And grid is very copper intensive. And, the grid focus, in fact, in that report, they emphasize the need for investment in grid, and you can see it coming up. But, I think, right now we're in the early innings of this game.
So what does this mean for price? If we don't have enough of it at the moment, given the intensity of what we need.
Are we going to see new highs above $11,000 a ton this year? I think it really high. We got close to it a week ago before this, this announcement. And the back end is at an all-time high. We still stand by our longer-term forecast of 15,000, which I think in the end is going to be relatively low. Now you have an environment where the underlying economic forces are reinforcing it, and then you have the energy transition story on top of that. The story it's there. By the way, I know I've been here telling you the story for the last 3 years. It works here, it works there. Ultimately, one day we're going to walk in, and it's just going to go straight up. And I'm very confident in that story. The question is, you just got to be there. It goes back to that point we're talking about oil. The investors are not willing to hold the position. They want to see it. And right now, we have a surplus.
Talk to me about gold. What do you do with gold right now?
Not to say love commodities. It's another one. Here's a point: is about a week ago we hit the all-time high in real gold prices relative to even in the 1980s, which tells you the environment we're in. So, but I think another point here is think about gold, how big that market. It's in that $13-14 trillion range. It's FX reserves of gold are now larger than the euro. Well, particularly in the size of the move, which tells you, the diversification inside banks, central banks is going to continue. The Chinese are continuing to buy. You now have Western buyers focused on it. So the underlying fundamental picture, 3,000 gold, I think, is very foreseeable.
Jeff, help me out with the U.S. election, because I have a number of market participants who'll say, look, the outcomes of the U.S. economy will change, and also foreign policy, but no one's really able to pinpoint exact policies right now, also given that the race is so close. What does it mean for commodities, depending on who's in the White House?
I think, when we look at China, the situation there is part of why they're waiting is they want to see the outcome of it as well. And if they get an outcome of Trump, they probably focus more on domestic consumption issues and less on exporting green goods. If it's a Harris victory, they focus on making investments in more green goods. By the way, the amount of investment that they've made is just astonishing. You know, even going forward, one out of every 2 megawatts of renewable installation is going to be in China, and it's going to be Chinese-produced goods. And so I think it has a lot, you know, are they going to continue this bet on the green CapEx goods has a lot to do with the outcome of the election.
Jeff, thank you so much, as always, for joining us. What a
excellent,
good conversation, as always. Jeff Curry from Carlyle Group. Now, staying with commodities, Rio Tinto has also won board approval to buy Arcadium Lithium in an all-cash deal that values it at $6.7 billion. Now, the deal boosts the world's second biggest miner's bid to become a major producer of the crucial battery material. So let's discuss this and some of the day's other big corporate news with Bloomberg's Charlie Wells. Charlie, we have a lot of corporate news, so let's start with Rio Tinto. How big is the deal?
I mean, good morning, Francine. This is a huge deal, and this is Rio's largest acquisition in 17 years. And it's striking because lithium has actually been in something of a downswing this year. So in a lot of ways, this is sort of an opportune moment to swoop in and get that rapid exposure to lithium. You know, this year there's been an oversupply, there's been cooling demand for EVs, but this is, if you look at it, a great time to pick up a company whose shares have been down about 50% this year.
Charlie, what's the latest with Commerzbank?
You know, we've got twists and turns coming everywhere. So this is, there's a new report in La Repubblica citing unnamed sources which say that Deutsche Bank may hire Morgan Stanley for some advice on Commerzbank. Of course, that approach by UniCredit. And look, executives at Deutsche Bank have said that they are not interested in making moves here. But of course, the largest bank in Germany is going to potentially want to get some advice if there's some activity in its backyard.
Okay, a bit of luxury. Gucci has a new chief executive.
Yes, exactly. So they have named Stefano Contino, who has a background at Louis Vuitton, a background at Prada, in communications and image, and he is going to take the reins in January of Gucci, which has been struggling. There's been softening demand for luxury goods, particularly out of China, and so analysts say this new chief executive has a lot of work to do, and if we want to look ahead, we need to think about what this might mean for the creative director, Sabato Da Sarno, who's taken a more minimalist direction at Gucci. Does that continue? That's a big question going forward.
All right, there you go. Minimalist versus maximalist in luxury. Charlie, thanks so much, as always. Coming up, more trouble for Boeing as talks with its largest union collapse for a third time. We'll give you the details next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This real momentum from Wall Street. We are basically deep in the European earnings season. Take a
look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Well, Boeing has withdrawn its pay offer for two unions, saying talks just don't make sense now. Meanwhile, S&P said the plane maker's debt may be cut to junk on strike concerns. We're now joined by Sid Phillip. He's our global aviation reporter. I mean, we're just, saying, Sid, how tough it is for Boeing at the moment. Why did Boeing pull its offers to the unions?
So Boeing and the union they resumed talks this week after 2 weeks of a stalemate in their whole negotiations. The union's been on strike for 4 weeks now, and that's basically damped production. And so Boeing went into negotiations with the union and a mediator on Monday, and yesterday, after 2 days of negotiation, they pulled their offer. And they said that essentially the union was asking for unrealistic demands, and essentially that's why they decided to withdraw their offer and said that the talks don't make sense at this moment.
So what has the union said in response?
So the union's obviously saying the opposite, saying that Boeing was unwilling to negotiate. I mean, Boeing came out with an unprecedented offer where they came out with an offer for 30% to the workers without going through the unions, which really angered the unions. And so the union said that they weren't willing to budge past that offer that they made. No. And so there's a big sort of gulf between the two sides, and that's really keeping the strike going.
So, but Sid, how crucial is this for Boeing actually to get a deal?
It's absolutely vital for Boeing. I mean, Boeing's burning through cash every day that the strike keeps going. And I mean, there's estimates that's about $100 million a day. And S&P has sort of they've said, like yesterday they came out saying that if Boeing isn't able to resolve the strike, and if the strike goes on longer, they could be forced to downgrade them. And that would be really, really difficult for Boeing because, I mean, once they go into junk status, the borrowing costs go up and it becomes that much more harder to get out of the hole that they're in at the moment.
I mean, I was going to ask you, I mean, junk debt rating, the headline is pretty worrying, but how difficult is it actually in practice to borrow?
It would be much more expensive. So essentially, it'd be much harder. You might not be able to access the same institutional sources of funding, and also you'd be much more expensive. And Boeing, with a $57 billion pile of debt, it would be really hard for them to sort of plow through that with borrowing costs going up, especially as they haven't really got cash flow until they start delivering airplanes.
Yeah. But Sid, does it put the recovery at risk, or does it just delay it?
It does definitely put the recovery at risk because at this moment, Boeing's got a huge backlog, and everyone's sort of taking comfort in the fact that it is a duopoly, and Boeing's backlog runs to the end of the year. At the same time, I mean, the longer that the backlog is not fulfilled, you have angry customers, you have penalties that potentially are on the line, and the fact that you've basically not been able to generate any cash because you only get cash when you actually deliver those airplanes to the customers. And without those deliveries, it's impossible for Boeing to start generating cash again. And so for them, it's vital to be able to get production back again, and that's conditional on a deal with the workers. So it's fairly it's a big problem for them, but at the same time, it's a fairly easy sort of fix in terms of getting that sorted out and then getting it on.
Sid, thanks so much. As always, Sid Phillip, there was the very latest on Boeing. Up next, the Bloomberg Brief, Vonnie Quinn in New York, Manus Cranney in Dubai, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Good morning for our viewers worldwide. I'm Manus Cranny in Dubai, Vonnie Quinn in New York. You're welcome to Bloomberg Brief. Let's set that agenda.
The risks are balanced for jobs and inflation. That's the call from Fed Vice Chair Jefferson. Minutes and a chorus of calibration voices to come from the Fed today. A potential breakup, the Justice Department mulls splitting Alphabet to mitigate the company's dominance in search. And if you stay, you'll die. The mayor of Tampa, Florida, warns residents as Hurricane Milton tracks towards the coast. We're live in Tampa later this hour.
Good morning to everybody. Check in on these markets, equity markets. What should they take away from the bond markets? We dip ever so slightly. Mark Hayfley at UBS say, get ready for a soft landing. The Mag 7 had a pretty stunning run yesterday, up nearly 2%. Alphabet at the bottom of your screen. We're trying to understand what's the next step from the DOJ. Will they break up Google? Will they break up the search business? That's the question that we'll ask during the next 60 minutes. These U.S. markets are unbothered by the China stimulus. That's a view from Ed Yardeni. But position for lower rates, according to UBS. Roll it over and have a look at the bond market. We're waiting for the minutes today from the FOMC. We've got a smorgasbord of Fed speak. We're building up to CPI. Yields pop ever so slightly. We've got $39 billion worth of 10-year auction coming down the pike. The bid to cover on the 3-year yesterday was a little bit lighter. But Bank of America say anywhere between 4 and 4.25. This was 24 hours ago. You want to step in and buy duration here. So, Vonnie, this is the message from the bond market. JP Morgan say net shorts are the highest since April 2023. The bond market is nervous about gradualism.
It is front and center, as are so many of the markets, so many potential catalysts, Manus, from, as you say, China sinking overnight to potential stimulus again from China at the weekend. And of course, all of the individual stock names. You saw NVIDIA's rise yesterday. And of course, we get into earnings season at the end of the week as well, Manus.
We do indeed. We have an unanchored bond market. Those are the views from Mohammed Al-Arian. But our next guest, Vonnie, is Mike Scott, head of global high yield and credit opportunities over at Man Group. And he weighs in on the reaction after the rate cut. This is the view. Markets enthusiasm following the Federal Reserve's rate cut overlooks emerging signs of strain among the consumers and companies. Mike is with us this morning. Mike, very first question. What is flashing amber for you? Or is it just a warning shot that you're raising a flag? Good morning.
Good morning. Good morning, man. It's great to be here. I would say that, certainly we are seeing some degree of bifurcation with respect to the consumer. We do have a rather negative view of the middle to low end of the consumer space in the US, and we are starting to see cracks appear, not least given signs of delinquencies picking up with respect to sort of credit card delinquencies as well as auto loan delinquencies too. So in many ways, I don't think it's a clear-cut story as the consumer in great shape or not. I think it's much more nuanced, but certainly there are signs of strains appearing for certain segments.
Mike, when you have an event like the jobs report that Friday that really roiled the bond market, and we saw treasuries move quite substantially, a 30 basis point move at one point, do you have to regroup entirely and take a look at your portfolio and perhaps even swap out some, opportunities for others in the wake of that?
I mean, I obviously work in sort of high yield markets, which certainly have a lower sensitivity to the interest rate cycle, much more dependent on the business cycle. But nonetheless, I guess the jobs report certainly signaled a more healthy jobs market than some of the surveys. What I would say, though, is I wouldn't take one data point as gospel. We do think that the labour market is slowing, and certainly we are expecting some degree of normalisation as we continue through the back end of this year and into 25.
Mike, I have this vision of you in the high yield space like a praying mantis waiting for a better opportunity to enter the market. Alarian said yesterday, 24 hours ago, look, this is an unanchored bond market. You must welcome an unanchoring, a slight unanchoring in high yield. It creates better opportunity for you.
Yeah, certainly. I think that's a very interesting point. We do expect as we go through Q4 and certainly through 25, increased dispersion. I would say that certain segments of the market are really rather expensive. I think particularly the more traditional cyclicals, whether you're looking at basic companies, materials, even areas like oil and gas, these are trading at some of the most expensive valuations relative to the overall market that they have done this cycle. So I would say that the market is certainly set for a soft landing. I think clearly the range of outcomes we think is broader and shouldn't be solely seen as a soft outcome. And we are looking forward to a period of higher dispersion, which we think is coming into view.
Are we about to enter a period where we'll see many more fallen angels, Mike? And to that point, if Boeing were to be downgraded, S&P has warned that now, would that be a company that you would be interested in, or is it too hard to handle?
I think when it comes to fallen angels, there's often a dichotomy between those businesses that are able to stabilize their credit profiles, and typically they can stabilize that in the sort of higher echelons of the high yield market relative to those businesses that continue to hurtle through the high yield market and onto default in a number of years. I would say that from a stocks picking perspective, we do look at all opportunities that come into our market, and certainly it can be extremely rewarding picking up large companies that we think are relatively well contained within that higher echelon of high yield, and really look to build exposure from the volatility of that downgrade.
Mike, we're 26 days out from the election, and I just want to get a sense from you. A lot of people have said to us, look, Harris equals status quo for the bond, for a variety of markets. When I look at the performance of, let's say, the Trump basket in your world since the September 10th debate, I'm looking at energy, autos, all underperforming ever so slightly. Energy, autos, aero, and defense, they're all just a little bit of underperformance. So is the market already beginning to position itself with the consensus from the polls?
I mean, I think that's a really interesting point. I would say that it's never as clear cut as either a Trump victory or a Harris victory. There can be a number of iterations, obviously, in terms of how the House swings. But certainly from our perspective, we do see that a clean sweep in either a red or a blue direction would certainly drive differing outcomes. And I think, as you pointed out, under a Trump scenario, we would expect, or a red wave scenario, we would certainly expect, a government that's pursuing higher tariffs and higher spending, and that certainly we think will have implications for areas like retail and certainly other importing sectors that rely on goods produced outside of the US.
So are those the balance sheets of the companies that you're looking at right now, Mike, in order to get ready? And what have you teed up for a potential move in November?
So as I say, we take very much a value-driven approach, and I would say that 70% of the high yield market we think is relatively expensive. We tend to look for opportunities in where we can underwrite credit for through the cycle type valuations. And these are typically in areas where we're already seeing some degree of secular pressure. So in areas of the US, for instance, we see some still reasonable value in areas like broadcasting, media, telcos, for instance, and obviously real estate, which has been extremely topical over the past 12 to 24 months.
Mike, thank you so much. Looking forward to our next conversation. That is Mike Scott there of Man Group joining us in London.
Thank you.
Now to other top stories trending on the terminal this morning. Boeing shares dropping in the pre-market after negotiations to end an almost month-long strike collapsed. S&P Global Ratings warned it may cut the plane maker's credit grade to junk. Both the company and its biggest union laid blame on the other side for the impasse.
Couche-Tard sends Seven & I a fresh offer worth $47 billion. That's according to the Bloomberg sources. The Canadian company is still trying to take over the Japanese retailer after its initial bid was rejected. The new offer represents a 20% premium from the prior one, the Seven & I stock price from yesterday.
And Rio Tinto makes a big bet on lithium. Despite the battery metals slump, Rio has paid a 90% premium to buy Arcadium Lithium in an all-cash deal worth nearly $7 billion. It's a step back into M&A for the world's second biggest miner and Rio's biggest deal in 17 years.
Coming up on the show, Google's antitrust problem. The Justice Department is weighing a breakup of the tech giant, Bonnie.
And later this hour, Manus, we speak to ADP's Neela Richardson on why economists were so unprepared for that surprise jobs report. Context matters on Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Space, the next frontier of the tech sector. On Friday, Bloomberg Technology is live in LA for a special episode from Rocket Lab, featuring conversations with founders and investors of the companies plotting humankind's future outside of Earth's atmosphere.
We're going to get hands-on with the future of space technology, from rockets to robots.
Countdown to 11 a.m. Eastern, 8 a.m. on the West Coast, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York, along with Manus Cranny in Dubai. The US is weighing an historic breakup of Google. The Justice Department may force Google to sell parts of its operations including seeking to prevent the use of Chrome and Android to its advantage. Let's get more with Bloomberg Executive Editor for Technology in Europe and Asia, now Peter Elstrom. So Peter, what exactly is the Justice Department asking for in this Google case?
So the Justice Department presented this 32-page document that lays out a whole range of remedies that could be used by the judge to address some of the monopoly concerns around Google's search business in particular. You'll recall that this judge ruled in August that, in fact, Google does have a monopoly in search, and it's been abusing its monopoly power in that area. So the Justice Department is laying out a series of potential remedies, including the most dramatic that you mentioned, perhaps breaking up the company, dividing search from some of the other businesses that it has. Also, in addition to that, they're talking about some behavioral remedies. So, for example, they may stop the company from using its Android operating system, the Google, the Chrome browser, to be able to direct traffic into its search business. You'll recall also that Google pays a lot of money to companies, including Apple, to make sure that they're using the search box for Google to generate a bunch of this traffic. Apple gets tens of billions of dollars from Google to make sure that people on their iPhones go to Google search.
Peter, good morning to you. I mean, Google say it's radical. It's going to have a series of unintended consequences for the consumer across the businesses. Look, how dramatic could this be? What's the kind of worst case scenario? Because we got to go back a long time in history to look at real teeth from the DOJ on a breakup.
You're right. The DOJ and the FTC have gotten much more aggressive here. You're probably alluding to the historical precedent here is really Microsoft, when the U.S. government went after Microsoft and talked about separating the Windows operating system or perhaps the Office business from the rest of their operations. In Google's case, you could see the search business be separated from some of these other operations, perhaps also the Android operating system, which is it's the most popular mobile operating system out there. It's very valuable in this mobile era to be able to direct people to certain websites, to certain services like the search business in particular. And also they've got a very big growing AI business that competes directly with OpenAI. So there are a few different pieces to this company that are very valuable. That's not even counting their moonshots, the really long shot investments in ambitious tech ventures.
Peter, how does this new filing now fit into this broader U.S. push to rein in big tech?
Yeah, well, as you allude to, there are many different investigations going on, at least 3 against Google itself in the United States. But also the U.S. government is going after Apple, partly because of its dominance in the App Store in particular. So Apple, Amazon, Meta, even NVIDIA, which has emerged as the dominant player in AI chips just recently, but already the Justice Department is looking at them and how they deal with their customers and how they allocate supply. So the U.S. government has had a couple of setbacks in their efforts, their antitrust efforts to rein in big tech. But so far, this one looks like it could set a precedent for some of these other efforts to rein in the power of big tech in a number of different areas that affect daily lives across the country.
Okay, Peter, it certainly is a moment of reconciliation between the powers that be and big tech. Peter Elstrom tracking the Google Alphabet story. Coming up in the show, Milton charges towards Florida. Here's what President Biden said about the hurricane.
This could be the worst storm hit Florida in over a century. And God willing, it won't be, but that's what it's looking like right now.
The top names in business are on Bloomberg.
The challenge for us now is not very much on the product It's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Attention is being paid to the storm surge on the west coast of the Florida Peninsula, and rightfully so, because that's probably the most serious threat to people's lives and property. But this storm is going to go across the Florida Peninsula, and it's going to exit on the east coast of Florida into the Atlantic Ocean, likely still as a hurricane.
That was Florida Governor Ron DeSantis providing an update on Hurricane Milton. Now, the storm is expected to hit the state this evening. Here to bring us the very latest on the ground, live from Tampa, is ABC's Rena Roy. Rena, the latest on the ground, we've got the mayor saying that literally this is a catastrophic situation. Good morning.
Yeah, Manis and Vani, good morning to both of you. Well, I can tell you that about 6 million people across 11 counties here in Florida are under mandatory evacuation orders, with Milton now just hours away from making landfall. And you can see behind me that it has already started raining here early this morning. We are expecting that to get even worse, the conditions to deteriorate as the day goes on. Milton is expected to hit as a low-end Category 4 hurricane later tonight, bringing up to 18 inches of rain and a record storm surge of up to 15 feet here in the Tampa Bay area. It has the potential to be one of the most destructive hurricanes on record for the state of Florida. It is unclear where exactly landfall will be, but at last check, the path was veering slightly more south near Sarasota, and it is all hands on deck here. The governor says the National Guard's storm mobilization is likely the largest in state history, with thousands of troops activated, and 34 search and rescue planes are on standby, and 37,000 linemen are either in Florida already or on the way to help with power outages. And some areas this morning are now extending evacuation orders further inland because of storm surge concerns there as well. Guys.
Well, that's just it, Rena. The destruction already expected to cost around $70 billion just around the Tampa Bay area alone where you are. What do we expect the breath impact to be?
Yeah, well, we just got word a couple of minutes ago here that the hurricane is actually getting larger and the wind field is now widening. And those high winds are really the big concern here, along with the storm surge. That could be record-breaking. We are expecting up to 15 feet of it here in Tampa, something that has really never been seen in recent records. Beaches, roads, businesses, homes, all of that could be destroyed, very badly damaged. This is expected to be widespread destruction.
Just very briefly, Rena, before we let you go, the evacuation by road, that is mounting at pace.
Yeah, well, we have seen traffic really backed up for miles the last couple of days. Gas has been running out as well at many gas stations in the area. The governor had to bring in extra fuel, and the window is really now closing for evacuations. As you see, the conditions are getting worse, so time is running out for people to get out to safety before this makes landfall.
Yeah, really difficult conditions. Rena, thank you so much for that report. We really appreciate it. That is ABC's Rena Roy live from Tampa. Time now for our front page news, a look at what's making headlines around the world. And we'll start with the New York Times, which goes with Israel's defense minister postponing his trip to Washington in the United States. Yoav Gallant was expected to meet with his U.S. counterpart, Defense Secretary Lloyd Austin, to discuss Israel's potential response to Iran's missile barrage. The Pentagon played down any suggestion of tension between the two sides, leading to that postponement.
Next up, Washington Post. Trump secretly sent COVID tests to Putin. That was in 2020 when there was a shortage. It's according to a new book. Then the U.S. president sent Russian president tests for his personal use. That's according to a book by the Watergate author, reporter Bob Woodward. According to the book, Putin told Trump not to tell anyone. Bonnie.
And on Bloomberg, Manas, China's premier vows to listen to the markets in a bid to lift confidence. Li Jiang promised to listen to the so-called voice of the market when formulating economic policies. Investors are keenly anticipating more fiscal stimulus to add to recent measures. Of course, it didn't assuage the market in last night's session. Manas, we did see the CSI drop precipitously, but there is now a briefing announced for Saturday, and that might prop up some shares in the coming sessions. We do want to check NVIDIA again as well, because, of course, it has a blistering 2 days behind it now, and it looks like in the early trade, we're higher again today, up by 1.4%. This, of course, after Jensen Huang spoke in Washington, D.C., and after TSMC sales beat estimates as well. It's a good sign for AI chip demand. It's all coming together for NVIDIA's stock price, which is at another record in the pre-market this morning. All right, we're going to get back to the macro environment in just a moment. ADP's Neela Richardson discusses uncertainty versus risk in the markets. And as you know, Manas, we're going to be hearing from many, many Fed speakers today, as well as that bond auction. So this market could look very different by 4 p.m. Eastern this evening. Do stay with us. Context matters on Bloomberg.
Institutions you've been very philanthropic with is your alma mater, Harvard. But recently, you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard student clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was, that's ridiculous. You can come out and say, look, I'm very unhappy about Israel's treatment of Palestinians in the West Bank, or you can say, we can talk about the Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, you know the people at Harvard. I'd like to know who the students are behind these clubs, so I make sure I don't inadvertently hire them. And so I tweeted out that sort of made that point, and caused a bit of a firestorm, and I got a lot of pushback. Why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Bonnie Quinn with Manus Cranney in Dubai. Let's set your agenda.
The risks are balanced for jobs and inflation. That's the call from the Fed Vice Chair Jefferson. Minutes and a chorus of calibration voices to come from the Fed today. A potential breakup. The Justice Department mulls splitting Alphabet to mitigate the company's dominance in search. And back to Cat 5. Hurricane Milton tracks towards Florida, expected to make landfall tonight. Vonnie, good morning. Counting down to the minutes.
Certainly counting down to the minutes and to all of those Fed speakers that we'll have today. And that bond auction, of course, Manus, that you referenced, the 10-year. Let's just take a quick look at the 2-year yield at 3.95. We are hovering around that 4% mark. No major move in either direction, although plenty of volatility within a few basis points. Want to point to S&P futures. We are down very slightly. Google is weighing on the pre-market. Plenty of stories higher too, though. Don't forget, we're pretty much at all-time highs once again. We had that 1% rally yesterday. It was a little bit of a trepidatious start to the session, but certainly that's 2 big rallies now since that jobs data. And then crude is an interesting one as well, because we're back below $75 a barrel in New York, but we are up 0.9%. Couple of narratives weighing there. We have obviously the potential retaliation to come from Israel on Iran still. We don't know if or when that will happen or what kind of response it will be. And then there is the news out of China. We may get more fiscal stimulus measures. There's more commentary set for Saturday now. The equity market in China sold off. It wasn't too assuaged by that. But there is a little life to the oil market, partially on the idea that there might be some more demand coming out of China as well, Manus.
Look, 100%. We've got to balance that oversupply that everybody thinks is going to come next year. Bonnie, I think on the bond market, the bid to cover ratio on the 3-year paper was a little bit lighter. Today is the 10th. One interesting big piece from JP Morgan, the net shorts, their survey, net shorts in the bond market for the first time since April 2023. This bond market is nervous. 10s are over 4%. And the bond market is sending a message to the equity market that I think it's going to touch a cloth ears for. So it is a little bit short here.
Manus, I think we need a little comment from Stephen Major. He's there in Dubai, so you'll have to root him out before you leave Dubai, because he has said many times this year investors have had several times to actually, buy treasuries. Is this another one? All right, well, we have lots of Fed speak today. Just as expectations for rate cuts diminish, traders will be watching CPI out later this week as well for cues on the next steps. Joining us now is Neela Richardson, Chief Economist at ADP. So, Neela, you right that clarity is the antidote to uncertainty, but that if investors, companies and consumers are kept guessing on monetary policy, that uncertainty could lead to unwarranted economic stasis. What possibly could any Fed speaker say that will give this market any clarification, bearing in mind that you have some who feel interest rates are 100 basis points too high and some who feel they're 100 basis points too low?
Yeah, and good morning, first of all. And unfortunately, I think these numerous Fed speeches today will probably just add to this bubble of uncertainty around the next rate move. And uncertainty is a really important word to use here. If you think about everything that's happened just since that last rate decision, we've had these major catastrophic weather events that could be inflationary. Strikes, again, could be inflationary. focused on those log jams. We have the current election cycle. So the Fed's position on this is to provide clarity by committing to a policy action. I think that's what Governor Bowman was trying to get across in her dissent. Not that a rate cut was unwarranted, but it needed to be followed by a commitment to a rate path, and that's still missing.
Nela, good morning. Depending on who you listen to, it was an expensive insurance card. It was a little bit too much. This economy's running hot. You've got GDP running hot, the Atlanta Fed. If the Fed paused, what is the unintended consequence for the jobs market? Would it have an unintended consequence in a pause?
I think that pause would be read if it wasn't followed by any kind of future-oriented action by the Fed. What we saw over the summer, both in the ADP jobs report numbers and the BLS, they were on the same page, is a very slow summer of hiring that was then ramped up in September, right after that Fed rate cut, right after that aggressive action by the Fed. They're saying that it thawed the stasis that we were seeing in hiring. That stasis wasn't driven by bad economic conditions. It was driven by uncertainty. And that's why economists make such a big distinction between uncertainty and risk. Risk isn't unknown you can manage, uncertainty you can't. The Fed's role in this is to reduce the level of uncertainty by being clear about the next year, 2 years of where they see interest rates go.
Yeah.
Nela, CPI in the morning, it's looking like we're looking for a 1% gain month over month for September, year over year, 2.3%. What number would change this market's expectations again? So on either side, so less inflation or way more inflation than expected?
Yeah, so for the CPI numbers, definitely any movement down is a good pace for us, especially in that core inflation, especially in shelter costs and services, which are really driving inflation right now. That's got to be balanced, though, by all the economic news events that we're seeing right now with the weather-related issues. But if you go back to that service inflation and to that blockbuster September jobs report, 254,000 jobs, I have to note that 3/4 of those job gains were from sectors that are not that impacted by interest rates: government hiring, leisure and hospitality, and healthcare. So the relationship between interest rates on the one hand and what this inflation report could imply and job gains on the other is not very closely tied together. And I think that's an issue for the Fed. They don't have the kind of mandate over the jobs market that one would think given the aggressive rate moves.
But I think what is interesting, when you qualify those 75% of the jobs that were created, they did not come, according to your research, with hot wages. And that is critically important because a lot of people have talked about sticky wage inflation 2025.
Wages were not the problem when it came to inflation. They never were. That was the economists' worst fear, that increases would lead to this wage price spiral that never materialized. And what we saw is that hiring was strong, but companies didn't have to amp up wage growth. That being said, wage growth is higher than it was pre-pandemic, and that's being reflected in the BLS report. So we can't sleep on wages. They're still very much part of the Fed's decision-making criteria, but what we're seeing is more stability in wage growth than what the BLS report showed in September.
Nela, thank you so much for being with Vonnie and I this morning. That's Nela Richardson there of ADP with the aftermath of the jobs report ahead of the CPI. We are 26 days away from the US elections. Campaigns are having to deal with how the Hurricane Milton could affect voting in Florida. President Biden canceled his trip to Germany and Angola this week to respond to the storm.
We're driving up preparedness for Hurricane Milton, which could be one of the worst storms in 100 years. I've spoken to all the political leaders in the region, some of them more than once, and I've told them anything they ask for, they can get. We've given, and we've gotten overwhelming response, positive response from everyone from the governors of Florida up to North Carolina.
Joining us now is Courtney Rosen from Bloomberg Government. The president making clear the resources. There would be sort of, substantial resources, $137 million in federal funds, a lot of troops, and the administration ready to really help out where possible.
Good morning.
I'll walk you through a little bit what President Biden is doing today to address the storm. At noon today, he's going to receive a briefing from his team about what's going on in Florida. At 5 o'clock, around 5 o'clock, he's going to make a speech, address the nation about how this government is responding to this issue, or to this crisis, I should say. That's about the same time when we're expecting the storm to make landfall on the west coast of Florida. Now, if you'll remember, President Biden is still cleaning up. The U.S. government is still cleaning up the southeastern United States from the last hurricane. And so that'll also be part of the discussions today, managing both.
What about the politicization of the hurricane, Courtney? So on the one hand, you have Governor Ron DeSantis reportedly not taking calls from the Vice President Kamala Harris on this. And then you also have Donald Trump suggesting that it might disproportionately negatively affect his voters.
Misinformation, disinformation is something we often see during disasters, and so that's not new. What is different is that this is being amplified by former President Donald Trump and also by Elon Musk. Now, the White House, I was sitting in a press briefing yesterday, or excuse me, the day before. They were very adamant about the need to tamp down misinformation about the amount of money that FEMA has to respond to these hurricanes. They were clear that they have the money that they need. Congress just replenished that fund, and so they're trying to spread the word on that. And another way they're doing that is by getting on Reddit. Yesterday, the White House began posting on different Reddit threads to try and address some of the misinformation that's percolating on that platform.
Well, Courtney, one thing, let's just pivot for a moment to the Middle East. We understand that Israel's Defense Minister, Yoav Gallant, his trip was postponed quite abruptly. And today we understand Biden will talk to Netanyahu, and they haven't spoken since August. Just talk us through the choreography of this.
Well, another clue that these two men are not getting along is what's happening in public, of course, right? President Biden will say one thing about where they are on a ceasefire deal in Gaza, and you'll have Prime Minister Netanyahu shoot that down, right? Say that's not correct. And so even in the last couple of days, as we've commemorated the first anniversary of the attacks on October 7th, President Biden didn't speak to Prime Minister Netanyahu. He spoke to the Israeli president to share his condolences. We got an announcement from the White House that's usually customary of calling a foreign leader. So there's been a lot of tension in public, and we'll see what comes out of that call later today.
Long few days ahead. Courtney, thank you so much. That is Courtney Rosen of Bloomberg Government. And you can dive into Bloomberg's comprehensive analysis of all facets of the campaigns by typing ELEC GO on your terminal. That's ELEC GO. Context matters on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage, and what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Well, one stock we're keeping an eye on today is Google. The US weighing an historic breakup of Google as a remedy in its monopoly case. The Justice Department may force Google to sell parts of its operations, including seeking to prevent it from using Chrome and Android to its advantage. Let's get more now with Bloomberg's Charlie Wells. So, Charlie, what exactly is the Justice Department asking for in this Google case? How dramatic could the changes be for Google?
This is pretty dramatic. So, earlier in the summer, we, of course, had that ruling from a federal judge about Google's illegal monopolization of search. And now we're getting to the point where the Justice Department is asking what they want, what the remedies they want here. And one of the more dramatic, of course, could be that breakup. Now, this calls to mind, of course, that 2 decades ago attempt by the government to break up Microsoft, which was unsuccessful. And, of course, Google's not happy about this. They called this move radical. It's one of several structural and behavioral remedies that were proposed. And it's interesting, right? So Daniel Ives, a senior equity analyst at Wedbush, said, a breakup is unlikely, but Google is likely to be battling this for years. So that's the sort of analytical take on this so far.
Yeah, well, the cases are piling up hard and fast, aren't they, against big tech in general and not just Google. If we look at this broader context from this administration, this current administration, how does it fit in terms of the pushback? You've got deep regulation in Europe, but the US is the driver of perhaps law cases as well.
Yeah, Manis, I mean, tech is really starting to feel that squeeze. Of course, the DOJ sued Apple. They're circling other of these other huge names. And some of this is political. But I think what's really interesting here, some of this is also technological, right? We are at what looks to be like a pivot point in AI. And I think when you get some of these technological advances, again, I mentioned that case, from 2 decades ago with Microsoft, that really was sort of the birth of the consumer internet, or at least the growth period for it. And again, are we at a similar pivot point with AI when we're starting to see concerns about how these companies, particularly from the DOJ, could use dominance to dominate these new technologies? So you get that political sense, but you also get the kind of technological sense as this evolves.
Yeah, well, you got to have deep pockets. You just look at the $20 billion that they pay Apple every year to make sure they are front and center on those devices. Charlie, thank you very much. Charlie Wells, tracking the Alphabet story. Another stock that we're keeping an eye on today, it's Boeing. We've got a cloudy path forward for the plane maker. The wage talks, they've hit another roadblock. The COO saying that the workers make, quote, non-negotiable demands far in excess of what can be accepted if we are to remain competitive as a business. Now, while the union group says that the firm is, quote, hell-bent on standing on the non-negotiated offer. Benedict Cannell is tracking every nuance on this. It sounds as if, Benny, we're actually moving further apart than closer together on the remedy to this strike. What's the sticking point?
Yeah, you're absolutely right. I mean, we spoke here at the start of the week, and things actually looked fairly good then. They were coming back together after a 2-week break. Negotiations were due to start again. And here we are, 2 days on, 2 sessions, and they've broken down. The 2 sides parted yesterday. There was a terse statement from Boeing. You've just cited from that. There was a response from the union. And both sides are sort of blaming each other. The Boeing side saying, you're making demands that we can't meet if we want to stay in business. The union saying, you're not really negotiating in good faith. These are demands that are too low. We want more than the 30% that are on the table. Boeing retracted those 30% wage increases, so it's unclear now how they will proceed. Will they come back with something that's even lower? Will they come back that's higher? We don't know at this point, but the pressure is building. Hours before the announcement yesterday, Standard & Poor's came out and said that they would possibly cut the rating to junk. That follows the other rating agencies. There's a lot of pressure on Boeing to get this resolved. A lot of money that's at stake here, and for the unions, similarly, we're in our 4th week now. They don't get paychecks anymore. Healthcare has dried up, so a lot of pressure from both sides to get back to the table.
All right, Benny, thank you so much. That is Bloomberg's Benedict Kammel for us in Berlin there. Let's turn to the world of private equity now. Our own Danny Berger spoke with Thoma Bravo's cybersecurity head, Seth Burrow, as the firm strikes a deal with cybersecurity firm Darktrace. She asked Seth Burrow about the environment for firms to go public, as JP Morgan's Jamie Dimon tells Bloomberg that policymakers have made IPOs more challenging. Take a listen.
It is very complex and expensive for companies to go public. One of the things that we deal with when we're thinking about taking a company public are the discounts that public shareholders require when a companies go public. And so that's something that we take into account. It's a long process and it's an expensive process. And it's also not one where it's one where it takes time for markets to potentially realize what we might consider the value of the company on day one. So we take all of that into account as we think about public markets. And I think he's right. I think Jamie Dimon is right that there's some changes that would need to be made to add some fluidity to those markets. And especially for very small companies, that process can be arduous and pricey. I do think that there is certainly the right national interest as it relates to the public-private partnership, with technology and the cyber industry. From a regulatory perspective, we don't think about it from that, perspective as it relates to building these businesses. Certainly I think that we have lived in a different regulatory environment from an M&A and antitrust perspective over the last few years. I think you've seen that impact deal volume and velocity. It's not impacted, our ability to do what we need to do to build companies and to innovate and create these best-of-breed vendors.
It's been a strange time for private equity as rates have gone higher. There's been some kind of gumming up of the system, some slowing of M&A. To what degree does a 50 basis point cut from the Fed just weeks ago reawaken animal spirits? Have you seen any impact to deal flow or activity in the market?
It's relatively small. And so over the last year, when we look at what our cost of borrowing, it's probably all in 100 basis points better, including that 50 basis point rate cut that just took place. That, for us, is not that meaningful. Most of what we're buying is heavily financed with equity. Maybe 30% of our capital structures might be debt. And that's true for most people in and around at least the technology sector, which tends to be much more of a growth buyout sector in private equity. So I think that it's helpful on the margin, but it's not a meaningful enough change to really unleash any sort of meaningful difference.
Seth Burrow there, the managing partner at Thoma Bravo, speaking to our very own Danny Berger. 50 basis points, didn't change the needle to the animal spirits. Coming up in the show with Vonnie and myself, all eyes on the Fed. Many officials are speaking. You're going to get a chorus of Fed speak. And of course, the minutes. Context matters on Bloomberg.
research on this, there's really been three. Number one, prosperity, as you've said. Number two, improvements in healthcare. So in 1900, half the children died on the planet before their fifth. And the third was the education of women. So we've had some pretty interesting questions put up here, but let's try this one. What keeps you up at night and what gives you joy?
Well, I think kids give me joy. So I probably get the most joy from my kids. You know, I'm not saying that that's the reason to have kids, because we should have them anyway, but I certainly, kids are the greatest source of joy in my life. In terms of what keeps me up at night, I guess it's anything that's like, I think, a civilizational risk. You know, if we're, the birth rates continuing to plummet, I do think about the birth rates plummeting as being a civilizational risk. I think anything that undermines the foundations of democracy in America or elsewhere as a risk. I think anything that's leading us away from a merit-based system is a risk. I actually spend I listen to like podcasts about the fall of civilizations to go to sleep. So perhaps that might be part of the problem here. There's literally a podcast called Fall of Civilizations, which I've listened to a few times. I'd also recommend Hardcore History if you haven't listened to that. It's a great podcast. I listen to history podcasts basically to go to sleep. So that's probably why I'm ruminating on these things as I go to sleep.
This is Bloomberg Brief. I'm Vonnie Quinn in New York, along with Manus Prani in Dubai. Now, let's take a look at what's ahead just today. Another Fed speaker marathon coming your way. We have Bostic, we have Logan, Goolsbee, Jefferson, Collins, and Daly all on deck throughout the day. Plus, the two-year Treasury will sell $39 billion worth of 10-year notes. That takes place at 1 p.m. Eastern. We'll be watching those results. And, of course, the latest Fed minutes set to be released at 2 p.m. We think we know everything already, but there might just be more to glean, Manus.
There's always something to glean from those FOMC minutes. Check out NVIDIA on a barnstorming run to the cash close last night, up 13% over 5 sessions. We're bid this morning. I can tell you this, once you've accounted for the stock split, $135 is that record high that we hit in June. Keep an eye on that. You got Reddit. Jeffrey's initiating the stock with a buy recommendation, citing a backdrop of generative, you got it, generative AI providing the opportunity. And Arcadium Lithium, Rio set to buy Arcadium Lithium for $6.7 billion. With the biggest deal since 2007. Bonnie, it's been great to be together. It's all about the bonds today.
Exactly. Much more volatility ahead, I think, that's for sure. Manus, thank you.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
To think that we could slip into a soft landing or a potentially harder landing is not unreasonable.
We look at it as a soft landing as we're already in the midst of it.
The problem with soft landing is it sort of would suggest that things have stopped.
It might not be landing at all and actually seeing the plane turning back up.
The economy is fundamentally sound, so it can absorb shocks.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your trading day started live from New York City this morning. Good morning for our audience worldwide. Your scores look like this on the S&P 500. Equity futures backing away after a 1% gain in yesterday's session. We're down 1/10%. On the Nasdaq 100, we're down by 0.2%. The next 24 hours shaping up as follows. CPI tomorrow morning at 8:30 Eastern Time. Later on this afternoon, the Fed speak from the Fed minutes from the last meeting. Look out for that at 2 p.m. Eastern Time. We start this morning, though, with a single name. It's Alphabet. Google in the pre-market negative by 1.2%. The DOJ knocking on Google's door.
And we already knew this, right? Bloomberg actually reported this was going to happen, but now we actually have the filing from the DOJ. And what it talks about is Google's anti-competitive conduct resulted in interlocking and pernicious harms. This is what the DOJ is talking about. What I think is so different now, when everyone's going to talk about Microsoft, is the politics. Remember, it was the Trump administration which first went after Google, and now it's the Biden administration that's inheriting it and looking for a potential breakup.
But what a lot of people miss in the Microsoft example of 2000, they say, look, maybe the worst will be avoided because it was avoided for Microsoft. They didn't break them up. It still scared Microsoft enough where they didn't make certain acquisitions. They held off on certain things, and it allowed up-and-comers like Google at the time to really shine. So even if they don't break them up, there are still consequences to be had.
A lot hanging over this stock through the year so far. Not just this story, but AI as well. And yet here we are still up year to date by close to 18% on Alphabet through the close yesterday. The quote from the DOJ pretty scathing, considering behavioral and structural remedies that would prevent Google from using products such as Chrome, Play, and Android to advantage Google Search and Google Search-related products and features.
Yes, so two potential outcomes, the remedies that we could see is putting an end to these exclusive agreements Google has with things like Apple, with Samsung, also prohibiting certain kinds of data tracking. And then, Danny, you make a great point when it comes to things like AI. Potentially Google will end up, even just by their own nature, because what they're seeing out of Washington, pull back on the sidelines of some of these agreements they're walking into.
It's one to watch this morning. Google's down by 1.2% in the pre-market. One to watch this evening. Hurricane Milton set to make landfall in Tampa. Across Florida on the West Coast, this is going to be a big issue for the state and maybe for the economic data for this program for months to come.
It's already a fog amongst the data. It's already confusing to figure out. Then you add in not just this hurricane, the hurricane before it too. It's a lot of factors to consider. And not just that, it is the human life. 5.5 million people being told to evacuate, the largest in the state. Just the logistics of that alone, save for the damage of the hurricane, is already complicating things.
In Irma in 2017, it was nearly 7 million people leaving their homes. This could potentially be bigger than that in terms of people getting on the roads. The roads are now clogged. Also interesting, Patrick DeHaan of Gas Buddy today put out saying that more than 1 in 5 gas stations in Florida are out of gas. So you can already see people are struggling to get the basic needs, even just to leave their homes right now.
We'll bring you updates throughout this morning, including this one from Alex De Silva of AccuWeather. He'll be joining us in about 10-15 minutes' time. Equity futures on the S&P 500 then doing okay. Equity futures just a little bit softer on the S&P 500, following a solid day of gains. We're down 0.1%. In the bond market, yields are higher by a single basis point. The 10-year holding on to 4.02% on a 10-year yield. Coming up this hour, we'll catch up with Andrew Sheets of Morgan Stanley on the path to a soft landing. We'll speak to Adam Kamins of Moody's Analytics on the economic impact of Hurricane Milton, and Rob Hocking of SIBO expecting volatility this election season. We begin this hour with stocks edging lower as the DOJ considers a breakup of Google. Investors looking ahead to CPI tomorrow for clues on the health of the US economy. Andrew Sheets of Morgan Stanley in the soft landing camp. Soft landings don't have to play out in a straight line. This is a tricky window where risks around growth are skewed to the downside. A few false negatives in the data can lead to bouts of volatility. Andrew joins us now for more. Andrew, welcome to the program. Let's start with that phrase, soft landing. What does it mean to you?
Good morning. It's great to be here. So for us, it means inflation coming down, the Fed easing, and no recession. And that's very much what Morgan Stanley has been forecasting, what we continue to forecast. And I think that's what fortunately, we've been seeing from the data. I think we were in a critical window over September and still in October where the market's going to be more vulnerable to weaker data because the Fed and the ECB haven't really gotten underway yet with rate cuts. But I think so far that data's come in pretty solid, and I think that supports the soft landing view.
Andrew, you referred to some of the data as a few false negatives, potentially in our future. Can we talk about the data we had through the summer and at the other side? Which one was the head fake, the deceleration in jobs through the summer or the re-acceleration we saw on Friday?
Yeah, so I think it was potentially this kind of rise in the unemployment rate. And this has been something that's in a lot of focus because, over a long period of time, it's consistently been one of the more worrying cyclical indicators for markets. Once the unemployment rate is rising, it's almost kind of too late. At that point, that's one of the last indicators historically to crack. And at that point, it's very bad for equities and credit. And I think that's what the market was concerned about. You had concerns about triggering the Somm rule. You had concerns that the unemployment rate was already going up. And yet the Fed, as of the July meeting, had still kept rates on hold. Now, there was another view there, and that was the view closer to the view of Morgan Stanley's economists, which is that the unemployment rate was giving somewhat potentially kind of misleading signals because of the shape of the labor market, the fact that participation was actually quite strong. That was kind of confounding the picture a bit, but we really didn't know. And even heading into the other week with the latest non-farm payroll number, you had a really wide set of expectations going into that number, an unusually wide set. So I think the number we got was good. We were at 160,000 at Morgan Stanley. We got a better number than that. And also, I think, given some of these very kind of unfortunate and tragic natural disasters that we're seeing in the U.S., that could make the next several data prints more uncertain. So I think the fact that we got one solid reading for the economy or another solid reading on jobs is quite helpful for, I think, assuring the market that for now the economy is still in an okay place.
Even with those prints, it's interesting to look, Andrew, at how Fed language hasn't changed. They are still talking about a balanced approach. Balanced is the new buzzword. Collins said it yesterday. Jefferson said it too. And we have an Atlanta GDP Now tracker at 3.2%. If it is a Fed that is still biased to cut with a strong economy, how positive is that for risk assets?
Yeah, so we do think we're still in a good is good environment. You mentioned correctly, we also followed that Atlanta Fed tracker. We think it's been a great indicator recently, and it is suggesting a very strong U.S. economy. But I think the other important thing is inflation is really looking like it's getting back under control, that kind of the battle against inflation has been won. And if you look at forward-looking inflation expectations from the interest rate market, say over the next 2 years, those are kind of below those are implying a number below what the Fed is targeting. So if we think about kind of historical performance patterns, certainly historical patterns for credit, you know, a scenario where the economy is holding up better, where the Fed is cutting more gradually towards neutral, which is, you know, what we're forecasting at Morgan Stanley. We think from this point on, they're doing 25 basis point cuts. That's been a much better kind of trade-off for risky assets than one where growth is weakening more and you're getting a lot more Fed cuts. So I think the scenario that we're getting in the data is very much tracking closer to that better soft landing base case.
That scenario you lay out, it's happening in the Treasury market. That repricing has happened since Friday. But Andrew, in the corporate credit market, the repricing hasn't happened. Investment grade spreads are still at 83 basis points, exactly where they were on Friday. Are you surprised by the resilience, the unmovedness of this market?
Well, you know, look, spreads are tight, but our view at Morgan Stanley has been that spreads should be tight, that we're in an environment of better than expected fundamentals. We think a soft landing is an unusually good backdrop for credit. Credit likes moderation. A soft landing is all about moderation and growth and inflation and monetary policy. And you still have very good technicals. You still have very strong demand relative to supply in the market, and better than average fundamentals, better than average technicals probably should mean, you know, tighter than average, richer than average valuation. So I think another important factor, and I'm glad you linked it to yields, is we do think we're in an environment where higher yields are good for spreads, that higher yields are bringing in more demand from insurers, from pension funds, from a lot of the buyers who've been really driving the market over the last year. And so, you know, with yields going up to 4%, all of a sudden that same spread, you know, hits a lot more yield bogeys for those buyers.
Andrew, right now we're dealing in an environment where there's a number of potential risks. In the United States, there's the politics, potentially we're not going to know for days, weeks, or we could see a contested election. Then there's the geopolitics. We've seen the short-term increase in the oil price. What is the biggest catalyst to potentially your soft landing scenario?
Well, I do think, you know, understandably, I think the U.S. election is going to and will get a lot of that focus. You know, I think you are facing a close election. That's one important factor. And between two candidates with very, very different policy agendas and policy proposals. And so, you know, I think in terms of thinking about factors that are not just going to affect the market over the next month, and we are, you know, less than a month away from the U.S. election, but also really going to potentially affect how investors think about pricing into next year. I do think the U.S. election probably stands out as a really important factor, and that's why certainly, you know, at Morgan Stanley, we've been devoting a lot of our effort to trying to understand the issues around it and research related to election implications.
Do you think the market right now is properly hedged for a scenario where the election might be contested?
Well, I think it's difficult to say. I mean, I think we have seen some increase in volatility around the month of November, but it's also a factor where this is an issue. I mean, I'll talk about the election more generally. That is a kind of a known unknown heading into next month. The markets had this on their calendar for a long period of time. I think a lot of investors in our meetings cite the election as a major source of uncertainty. So, you know, I do think as much as it's fair to say that the election is bringing up the potential for volatility, is bringing the potential for uncertainty, I think it's also possible, you know, it's also fair to say that investors are very aware of this and that they're going in with their eyes open. Now, you know, again, I think it's a factor that we also, when we look out into 2025 and, you know, again, we're pretty optimistic, say, on more M&A activity in the market. You know, we actually think that moving past the election, just kind of having this, once this question is resolved, that can be a positive catalyst in certain ways, that can help, we think, trigger more corporate activity, and that there are some, you know, some risks associated with it, but also some positives as you move past the event.
You're not the only one who said that. Andrew, appreciate it. Andrew Sheets there of Morgan Stanley. Your equity market on the S&P 500, just a little bit low. We're down 1/10% with an update on stories elsewhere. With your Bloomberg brief, here's Yahara Hackers. Hey, Yahara.
Hi, John. Millions in Florida are bracing for a potentially catastrophic hit from Hurricane Milton, which is approaching the state's west coast as a dangerous Category 5 storm. Milton is expected to make landfall later today, bringing damaging winds, heavy rainfall, and a life-threatening storm surge. This will be the second major hurricane to strike Florida in less than 2 weeks. Meanwhile, the Justice Department is considering breaking up Google. It comes after a judge found in August the company had broken antitrust laws to ensure its dominance of online searches. In a court filing, the DOJ said, quote, "For more than a decade, Google has controlled the most popular distribution channels, leaving rivals with little to no incentives to compete for users." The judge could also order Google to provide access to the data it uses to build its search results and artificial intelligence products. Google has already said it will appeal the ruling. And the Kremlin confirmed that former President Donald Trump sent Russian President Vladimir Putin COVID-19 tests during the height of the pandemic. The claims were first reported in a new book by Bob Woodward, in which he also said the two leaders had spoken by phone several times since Trump left office. The Kremlin denied that claim. That's your Bloomberg Brief. John.
Yahira, thank you. More from Yahira in about 30 minutes' time. Up next on the program, Florida prepping for the storm of the century.
The current path of the storm affected the Tampa Bay area and cut directly across the state, east to west, all the way across the state. This could be the worst storm to hit Florida in over a century. And God willing, it won't be, but that's what it's looking like right now.
The conversation just around the corner, live from New York City this morning. Good morning.
We spent some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
DOJ or other authorities
could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
The latest news from Citi. Good news is still good news. Your equity market on the S&P 500 just a little bit softer. We're down 0.1% on the S&P 500. Still Goldilocks over at UBS. Mark Hayfully. The US data is not so strong that the Federal Reserve's contribution to the global rate cutting cycle looks set to end. Still, we hold on to a 4 handle on a 10-year. Yields just a little bit higher again, 4.0178%. Under surveillance this morning, Florida prepping for the storm of the century.
The current path of the storm affected Tampa Bay area and cut directly across the state, east to west, all the way across the state, with the potential for this storm to both enter Florida as a hurricane and leave Florida as a hurricane on the Atlantic coast. This could be the worst storm to hit Florida in over a century. And God willing, it won't be, but that's what it's looking like right now.
So here's the latest this morning. Florida bracing for Hurricane Milton, a dangerous Category 5 storm expected to make landfall later tonight. Forecasters anticipating the storm will deal a serious blow to the Tampa Bay area less than 2 weeks after Hurricane Helene hit the state's west coast. Joining us now is AccuWeather's Alex De Silva. Alex, you've been tracking this one for days. How are things shaping up?
Yeah, well, we've seen the storm explode here over the last 24 or so hours, getting back up to Category 5 status as it closes in on the Tampa Bay area. We're calling for it to be a Category 4 hurricane, very dangerous hurricane, as it makes landfall from the mouth of the Tampa Bay down to around the Sarasota area. So small wobbles can make a big, big difference. The main concern I have is going to be the storm surge. It could be catastrophic, especially around the Tampa Bay area, down south to around Venice, where we could see as much as 15 to 20 feet of storm surge just south of where the storm makes landfall.
Alex, when exactly will the storm make landfall, and is there a chance that it can weaken ahead of time?
Yeah, we are expecting the storm to lose a little bit of wind intensity as it moves to the north due to the fact that it's going to be interacting with a little bit more wind shear across the northern Gulf Coast. We are forecasting landfall to be 2 a.m. Thursday morning Eastern time, right around the mouth of the Tampa Bay.
Alex, we've heard from the mayor of Tampa saying if you choose to stay in one of these evacuation areas, you will die. Can you just underscore the historic nature of this, how different this hurricane is to past ones Florida has experienced?
Yeah, well, it's going to be extremely dangerous. And the mayor was pointing out that the storm surge is being the primary concern here. The storm is going to be coming in from the southeast like this, and it's going to be shoving all of the water into all of these little bays and inlets. And it's a very flat continental shelf, which is more prone to storm surge. So you're just going to be pushing all of that water into these bays, and it's going to be trapped in there. So you could have multiple high tide cycles of storm surge coming in. And then, since we had Helene, a lot of these bays and inlets, the barrier islands, have been significantly weakened by Helene. So a lot of the sand dunes and things like that have been weakened. And so this area is much, much more prone to storm surge.
Alex, appreciate the update. It looks absolutely brutal. Alex De Silva there of AccuWeather on the latest with Hurricane Milton. Let's head over to the nation's capital. Katie Light standing by, Bloomberg's very own. Katie, let's cut to the chase. There has been an attempt, I think, on the campaign trail to make this a political issue. Yet when you hear from President Biden and Governor Ron DeSantis of Florida, it doesn't look like there's a problem between the two in any way, shape or form.
Between the president and Ron DeSantis right now, John, sure. Between the Vice President and Ron DeSantis, perhaps a bit more so, as there's been accusations that she was trying to politicize the situation by making a phone call to Ron DeSantis. He later said he wasn't aware that phone call was made, but said she really has nothing to do with this. So it is being factored into this presidential campaign, not just when it comes to Kamala Harris and her role in this, as she potentially could have the power here to look presidential, to express empathy to people, but also if there's any weaknesses in the federal response and people are unhappy with it, that because she is associated with this administration could backfire on her. Then there's the Donald Trump factor as well, when we're thinking about how he may be politicizing this, as he has been spreading mis and disinformation about hurricane response, falsely claiming that FEMA's only providing $750 to those who lost their homes, falsely claiming that $1 billion in FEMA money was sent to migrants instead and now has gone missing, making false claims about the rescue efforts as well. So much so that even a Republican congressman from North Carolina, Chuck Edwards, had to put out a statement yesterday debunking some of these online rumors and misinformation, including saying no one can control the weather, because yes, that is something that some Republican members of Congress has been suggesting is happening here. FEMA has a rumor response page up on their website now, and of course we heard the president yesterday speaking from the White House saying that this kind of misinformation is making people fear that the government is not going to be there to help them when they are.
And when it comes to Florida, I spoke to Governor DeSantis' team before Biden came out, and they had said President Biden, the governor, had a great conversation, and Biden gave him his personal line, which Biden then confirmed to the press. So when it comes to all of this, let's cut to the chase. Is FEMA, is the Biden administration doing its job and getting these states everything they need right now?
To this point, Anne-Marie, there has been no major complaints from those leading these states in the recovery efforts that FEMA has had major shortfalls. Obviously, no rescue effort and recovery effort is going to be perfect. There has been some condemnation of certain delays in arrival times in Western North Carolina, for example. But by and large, the resources have been there. And despite concerns over funding that FEMA may have resources that they may not have to offer, the Homeland Security Secretary Alejandro Mayorkas said they do have the money and resources to meet the immediate needs of this storm, including having tens of millions of meals ready and water ready to go. And of course, already 900 personnel surged preemptively to Florida as they deal with the aftermath of Hurricane Helene that hit just 13 days ago, and now are preparing for Hurricane Milton. Longer term, though, there is going to be a question of the economic toll of this storm combined with Helene could be hundreds of billions of dollars. And in that longer term funding is a very different conversation, one that is likely going to need to be addressed by Congress with a supplemental, though the House Speaker, Mike Johnson, has said there's no rush for them to return here in Washington to vote on that.
Congress has a really long to-do list when they come back into session, certainly in December. Kayleigh, how can this impact November 5th and people's ability to vote?
Well, that's a major question, Anne-Marie. As we are talking about potentially 15 feet of catastrophic storm surge, major damage could be done to infrastructure, as we already have seen in western North Carolina, where roadways and transitways have been majorly damaged. And even the Transportation Secretary, Pete Buttigieg, when we spoke to him last week, said it could take a long time for that to normalize. So it does raise concerns about the ability for people to get to a polling place or to be able to mail a ballot in for those absentee ballots to actually work their way through the system. So it could have a major factor here when it comes to turnout. The other question, of course, is how it may impact voter sentiment in these affected areas, not just when it comes to the presidential race, but races down the ballot as well. I was speaking with some people yesterday who noted Senator Rick Scott in Florida, which is an area where Democrats are eyeing what could be a long shot but potential pickup opportunity of his Senate seat, does have a long history of being able to respond to disasters, as he was the former governor of that state. He, of course, showed up with President Biden when Biden visited Florida last week in the aftermath of Helene, and this could potentially be something that actually helps him in his race. So there's a lot of political implications to consider here, though, but actually allowing people the ability to vote, making sure they have what they need to exercise their role in the democratic process is going to be a major one.
Kayleigh, does it change the tone just globally of candidates' ability to campaign when there are natural disasters and concerns and using aggressive language otherwise and other issues? Does this mean it's time to pull back, considering the national dialogue?
Well, rhetoric, Danny, I guess we'll see. We haven't necessarily seen that historically when it comes to at least one of these candidates, but it could change the nature of the campaign in these final weeks leading up to the election. We saw last week that the candidates diverted their plans to be there to respond to Helene, to visit some of the affected areas. Kamala Harris cutting short a western swing, for example, returning to Washington, Donald Trump traveling to Georgia as soon as he could. So this could potentially focus the campaigns instead on Florida or reduce the actual campaign activity out of respect for all of the millions of lives that could be affected by this. It also, I would note, is changing the plans of President Biden, who was scheduled to leave tomorrow for a trip to Germany and Africa. He has now postponed that to be here in the States to respond to this potential catastrophic disaster.
Kayleigh, appreciate the update. Kayleigh Lines there, Bloomberg's very own. You can catch Kayleigh, of course, on Balance of Power at 5 p.m. Eastern Time, weekdays, Monday to Friday. Somewhat embarrassing for both candidates over the last week on this issue. Much more so, I think, for the vice president just yesterday, undercut by her own president, almost at the same time she was appearing on The View in a news conference.
It was almost simultaneous, right? So The View was asking her about this phone conversation. She didn't mention Governor DeSantis by name, but she said, look, I've picked up the phone, talked to Democrat, Republicans. Some people want to make this partisan. Then the former President Biden was asked about this. Reporters were leaving the room, they're shouting. He's like, look, Governor DeSantis is cooperating. Actually, I gave him my personal line. And that is what the DeSantis team told me yesterday morning. They had a really positive phone conversation. We don't know what this call is supposed to be about with the VP. And he's getting everything he needs from Biden.
And the vice president doesn't usually call when there's a hurricane.
Usually
which is something she didn't deny in that conversation yesterday.
Usually the Oval Office to the governor.
Up next on this program, Adam Cummins of Moody's Analytics on the potential economic costs of Hurricane Milton. That conversation up next.
the Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, they feel that the power, the energy. So now they come back to the store and they buy more.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Tuesday was kind of like Monday, upside down, almost across the board, equities, bonds, and in the commodity market too. Equity futures right now on the S&P 500, negative by almost 1/10%. Similar move on the Nasdaq 100, down by around about 1/10. A big run for tech stocks. Nvidia extending a 5-day rally. The gains, Danny, in the double digits for that single name.
And we're back to tech supporting the overall market just like that, just as yields may be coming down, supporting it. It is a macro environment, John, that feels just so supportive of risk. Every single Fed speaker is using the word balanced, that the risks are balanced. They still have a cutting bias, even with the strong economy, and GDP now at 3.2%. Why not buy?
It's just a sense that even if you think the high end of neutral is in and around 4, you've got 100 basis points of rate cuts still to go, and the next 100 is maybe an easy decision. If you switch up the board and get to the bond market, we saw a bit of steepening come back into the curve, led by the front end. Yields down. See it again this morning, just on the margin, down by almost a basis point. The 2-year 395.25. The fireworks in the commodity market. Check out Brent crude and WTI. Brent crude snapping a 5-day winning streak in yesterday's session. Big move lower. The biggest one-day slide since early September. At one point poised for the biggest one-day drop, going all the way back to 2022. Anne-Marie, still on Middle East watch here. Brent crude 76.84.
Right, so this might be just a pullback momentarily based off what was going on in China, people questioning whether or not we're going to actually see demand pick up in mainland China. The issue, of course, the overhang, the cloud over this market is what goes on with the Middle East, and potentially we'll get some details today. We were supposed to have the defense minister of Israel come to the United States for these talks. That's not happening. Netanyahu said, no, I'm going to talk to Biden myself.
Have we got closer to some kind of agreement with Lebanon in the last 24 hours? Did that contribute to some of the moves we've seen over the past few days?
Potentially, but then you also look at what's going on the ground, and there's still constant fighting. And Netanyahu does not have the strategic wins I think he wants, even though he's had some wins over the course of the year.
Brent crude down by 1/3%, 76.90. Under surveillance this morning, talks breaking down between Boeing and the Machinists Union, with the strike nearing its 1-month mark. The company and union blaming each other for the impasse. S&P Global Ratings warning it may cut the plane maker's credit rating to junk.
So this was basically a double punch overnight when it comes to Boeing. One, the S&P talking about that it's going to have to potentially go to junk as they're basically just hemorrhaging all this cash. At the same time, potentially you thought we were going to get a deal. And I thought maybe the timing of the deal was ripe because of the fact that these union workers were actually losing access to health care. But no, they say that what Boeing's offering or not offering is just not working, and talks absolutely shut down.
I got to say, it's quite remarkable that they're not getting closer, that neither side is budging. The union saying that Boeing's not backing off of the original deal that they proposed, despite the fact that Google wants to raise $10 billion via an equity offering. How much more difficult is that going to be if they get cut to junk? Time is not on Boeing's side. They're burning through billions every single day that this goes on, and still yet they're not moving on these issues of pay.
Boeing down again this morning. It's negative by 1.4%. Let's talk about Google. The U.S. Justice Department weighing a breakup of the company. The agency saying in a court filing, it's considering options to mitigate the tech giant's dominance in search, ordering Google to share its search data is also on the table. That name's down 1%.
There's a ton of things that could be on the table here to make this a remedy if there's no official breakup of the company. End of exclusive agreements that Google has with places like Samsung, like Apple, prohibiting certain kinds of data tracking, the 32 pages that the DOJ filed, absolutely scathing at what they view Google doing. Google basically coming out and saying this is ridiculous and this goes beyond what we're seeing. But this might drag on for years. What I find so fascinating about this story is that the politics of this, basically, there's a bipartisan push in Washington, D.C. to go after these big tech names.
I just wonder how they do this, how they break up the company or at least separate parts without disadvantaging consumers. I mean, people like the idea that you can pull up Google Chrome, you can just go straight to Google search. No one wants to choose which search engine they go to. Like Google says, I mean, it's the best one. They want to be able to go to their email, their Gmail really easily and go to Maps. People like that all these things are together. If you break them up, are you going to have consumers who actually face consequences, as Google says they will?
You have to say, and I'm not in a boat alone. I think a lot of us do this. If I log onto something that defaults to Bing, I often just go onto
100%.
Google, right? You just go onto Google.
Yeah, Google is so much better, and they now have that weird little AI thing that like isn't telling you to put glue in sandwiches anymore. So, you know, they're getting better.
Is it fair to say that AI is a bigger threat to them than maybe the DOJ is at the moment?
Well, the interesting thing is that Google seems to have not gone as full force into AI because of this threat. They didn't make acquisitions or push as hard to rival OpenAI. And a lot of commentators have said the reason that they haven't done this is because they know this antitrust threat is hanging over their head. So it's possible it's already made a difference to Google's behavior.
Alphabet this morning down in the pre-market by something like 1%. A top story for this nation this morning. Hurricane Milton heading towards Florida's west coast as a Category 5 storm with 160 mile-per-hour winds. The U.S. National Hurricane Center expecting it to make landfall at some point tonight with flooding, winds, and life-threatening storm surge.
This is absolutely devastating on the human level, which is why you have, up to the highest level of office, President Biden telling individuals, please evacuate millions of people, which is why you see the highways really clogged. Ron DeSantis, late last night, gave an interview to the Weather Channel talking about the fact that we can rebuild your homes, we can rebuild your business, but you might lose your life if you and your family stay behind. And then you actually look at some of the business impact. Goldman coming out with what this may cost Disney. Disney really wanted to get people back into the parks. This is not a good time of year, especially leading up to the holidays, and they're going to lose a lot of customers, but obviously, most importantly, is people getting out of harm's way.
Without a doubt, that is top of mind this morning. Let's talk about the economic fallout as well. Economists weighing the potential cost of the damage caused by Hurricane Milton. Adam Cummins of Moody's Analytics writing, the historic strength and path of Milton threatened to make it one of the costliest hurricanes ever to hit Florida. The size and power of the storm somewhat resemble Hurricane Wilma from 2005, which resulted in more than $20 billion in damage. It is likely that Milton will carry a price tag at least that high, but possibly much higher. I'm pleased to say that Adam joins the program now for more. Adam, welcome to the show on what is going to be a pretty somber 24 hours and maybe a few weeks, perhaps even months, stretching into 2025 for this part of Florida. Adam, you've mentioned this in some of the research you've done. Are parts of Florida going to become uninsurable, given the frequency of events like this?
That's the risk, and we are certainly seeing this along the Gulf Coast. We've had multiple years now with major, historically strong storms. If this continues, we've already seen a lot of private insurers pull back. We've seen insurance costs rise dramatically. That has an impact on affordability in Florida, which is becoming increasingly problematic. So there's a sort of a vicious cycle that's being entered into here for a lot of Florida.
The Biden administration has also warned that the Small Business Administration would very soon exhaust its funding for disaster loans for homeowners and businesses already in the wake of Hurricane Helene. Now you have Milton. Adam, what is going to be the ability, how expensive and how possible, just given what you're saying about insurance, is it going to be to rebuild some of these places after the hurricane?
I think it depends on the scale of rebuilding that's needed. So if we're talking about an area, south of Tampa, we've seen places like Naples and Sarasota, which are in the potential cone of uncertainty here, that if they get hit very hard, it is certainly feasible to rebuild them. FEMA can pull together more funding potentially. If it's an area like Tampa, which is just so vast and so huge, the rebuilding effort would be unbelievably expensive. It doesn't mean they wouldn't do it, but I'm not sure how feasible it would be to rebuild it back into what it is today.
Adam, can you put some numbers to that? Just how expensive?
So we can say kind of the baseline here. I look at Hurricane Wilma, right? It's similar in terms of strength. That was also a historically strong storm. It was not that large. That is maybe one saving grace here with Milton, is that it's not especially large as hurricanes go. That cost $20 billion roughly in insured losses. We would expect that this number is going to be significantly higher than that. How much more? It really depends on the track. So if there's a direct hit or close to direct hit on the Tampa area, we're talking significantly higher than that. If it's something that hits in an area like Naples or Sarasota or one of those metro areas, then probably that $20 billion is a good starting point, and I don't think it would be dramatically higher than that necessarily.
Adam, do you think this will just force people in the end to relocate their families and their businesses?
It's a really good question, and something we've thought about a lot. I mean, really what we've seen over time is that climate change and hurricanes and the threat of damage, it really has not been something that has compelled people to move out of high-risk areas. I think the thing that could do it goes back to what we were talking about a moment ago, and that would be the insurance market. If portions of Florida that are hit are deemed uninsurable or insurance costs continue to rise really dramatically, higher costs, lower affordability, that's what gets people to move ultimately. I think that's what I'm watching most closely. And as we go after, see year after year of